Friday night in the big town, OKC that is. Well, big news going on. You probably saw, if you weren't in the waiting room, thank you for everybody being here and supporting the channel. Happy New Year to you. This is our first official live of 2021. We're only 8 days in. We have the new 2483 SD second draw for the PPP. It is out. And so if you take a look at my website, there's a link there. And so here's what we're doing tonight. We've got me on the phone. It's turned around. I don't get to see myself. I don't get to see any comments right now. So I probably know we have our usuals and our wonderful YouTube family here Friday night, 8 p.m., running a little late because we are going to be doing something special this evening for those that were at my 2 seminars today. And so we are loaded up already with questions for those that attended the 2 seminars today. And so what we're going to do is we've got the questions, and this is old school. Am I right, Amanda?
Yes.
This is old school, where we are going to be in a set of circumstances where Amanda's standing right there. In fact, I think on this microphone, we need to hit the, there's probably a different button here. Let's see if this, I think that'll work. Let's see. We'll find out. So we are excited to be back live. We've been talking about it for a while. Thanks to many of you that have been encouraging that. We've been staying in touch offline. Rob of Imagine That Toys and With Flying Colors and Coach. We got wonderful emails over the holidays from many of you. Fred sent one just super nice right there, talking about getting ready to watch my 4-hour video on New Year's Day. We got Jean, I'm sure, that's in the house, and Charlotte, and we probably have Glenda, maybe Leah, and I had said With Flying Colors. Boom. Who else we got on? Because I can't see. I was just taking a stab. I was taking a guess. Amanda wanted to make sure I said With Flying Colors, but I already knew. I guessed.
Yeah. And yesterday's tomatoes, as well as Tony Deanna, both have sent.
Aw, Tony, what's up? Tony sent some money?
Mm-hmm.
Well, thank you.
We have Valerie Clark and Metal Bum.
What's up, Valerie? Metal Bum is on? We haven't seen Metal Bum on a live. Well, I guess we haven't been live, but Metal Bum from the beginning. Valerie, how are you? And One Tomato, thank you so much as well. Might have a little Captain Phillips, John Hamilton. These are just off the top of my head. I think I said Coach. But anyways, so today I did a couple of seminars back to back, and they were supposed to be 3-hour seminars. Anybody want to guess how long they actually were? Well, the first one, record time, I got it done in 4.5 hours. 3-hour seminar, got it done in 4.5 hours. And then the second seminar, I was running out of steam, I think, a little bit, going possibly a little slower. But we went, 5 hours? Was it 5 hours? Mm-hmm. Something like, no, it was 4.
The second one, 4.
Yeah, it's 4. Okay, well, maybe I was going faster. I don't know. Anyways, it was great. Thanks for everybody that attended. We were going through basically PPP 1 forgiveness, PPP 2, as well as then the EIDL, a little bit on the EIDL, the employee retention credits, as well as the sick leave credits and the family paid leave credits. So what we're doing is old school. We've already got our list of questions. These are for the individuals that, and might be some of you right now. Thank you for attending today. So what we thought would be easier is that we would go live, answer the questions, and what was it, last Sunday, the 28th, I did a 2-hour seminar that I did in 2.5 hours, but then I stayed for 4 hours answering questions. And so I did tell Amanda that we won't go past midnight.
Yes, and we are not answering questions from the live tonight. We are only answering questions from the people who paid and were at the seminar today. So I do apologize. So I do see questions coming through, but we're not answering those today unless you attended the seminar.
Yeah, and so the reasoning for the live is to go through these questions, and we know that the normal format is that we will gauge questions. Amanda and I have come up with maybe a way that we'll approach future lives to make that a little less of a fury. I will say this, and definitely don't take it in a way that I'm soliciting, but I do want to say thanks to Tomato One and to Tony for throwing some dollars out there. And we want to extend our thanks for everybody here. We hit, I'm not even remembering to mention this. We're over 52,000 subscribers. Thank you to you, those that are on with us right now. I really appreciate it. Well, should we get started, or what else am I missing?
That's it. And they were asking what you were drinking. I told them that you were not drinking anything strong because he has had maybe 1 hour of sleep.
Yep, I stayed up all night last night because I love it. Putting together things coming up related to the stimulus, wanting to be prepared for that. And if you don't mind, I'm just going to mention I'm doing 2 seminars tomorrow for the self-employed. You can go to my seminar page on my website to find it. I'm doing a strategy seminar on Monday. No, doing a strategy seminar on Sunday. And then I'm doing 2 short seminars on Monday related to PPP. One for the self-employed, only strategizing on PPP2, and then one for employers. So got a number of them, and I'm putting out as many videos as I can. I've been waiting for where we are right now, so I will be putting out videos. I'm not going to hold anything back on what I put on my channel. I know there's lots and lots of people that need the information, and I'm happy to provide it. The difference is with my seminars that I'm doing, it's a Zoom, it's limited. There's a PowerPoint, so that drives the entire seminar. I'm able to provide worksheets and calculations and go through it and links. And basically with the Zoom, it's a seminar setting, which is obviously different from than doing the videos on YouTube. It is then videos subject by subject. So I will be putting videos out talking about the second draw application, pulling together the information, but I definitely think you'll get a full encompassing. So anyways, we've got thousands and thousands and thousands and thousands of people that are tuning into each video. So know this, I can only have like maybe 100 at a time on a seminar. So nonetheless, we're ready to rock, hit some questions. We will say the one. Maybe someone could give a little feedback here. Amanda, I've changed the setting, so we'll pay attention to see if they can.
If you guys can hear me, if you can hear me okay, you can just say, I can hear you okay.
Here we go. See, this is just like the olden days. This is like the olden days.
In the olden days, Amanda had to yell.
Yeah, seriously. Well, and you all have been here.
Hear me okay.
I had a little lapel, and then it didn't work, and we would hold the phone the wrong way. So
we've come a long way, honey.
Yeah, we have.
All right.
All right. Hey, thanks again for everybody being on. Now we're going to get into the questions. And here we go, rapid fire. And let's do this, though, Amanda.
Yes.
Maybe every, I don't know, whenever you think we need to, but often. I want to show some people we've got some gifts.
Okay.
I wanted to show some people that we got, kind of change it up. And we've got our kitchen back here. Of course, you can see some of the favorite things, but I've been sitting in my home studio doing these seminars, so I was like, you know what? I just want to stand. I just want to stand. All right, here we go. 3, 2, 1. JJ the CPA here. Hope you're doing well. Live. All right, here we go.
This is from Brandon.
What's up, Brandon?
State COVID grants are taxable in terms of federal income tax.
Most of the time. So the state grants that came out of the CARES Act typically are yielding federal tax on them. But what you'll want to do is check with the agency that you got the grant from. They will know if it is taxable. I will know this, that in Oklahoma, the grants that were given out, there was a letter that made it very clear that it was taxable. Some are not going to be taxable to the state. So at the end of the day, check with the agency that gave it to you. Unfortunately, because these are different state to state, you would want to really drive down. I don't know that I would be able to give you the best answer, but most of the time, the answer will be yes on the state grants.
Side cap, Robert of Philadelphia Salons
Robert.
just gave you $52
Oh.
to celebrate $52,000.
Thank you, Robert of Philadelphia Salons. You know, Robert and I connected. I woke up in the middle of the night, and this was probably back in March, maybe early April. I woke up in the middle of the night, and then I felt compelled to get on my YouTube and start looking at comments again. I'd fall asleep answering questions and following up, and I was answering this question from Robert of Philadelphia Salons, and I answered it, and then 30 seconds later, I got a reply, and it probably was, felt like it was 3 o'clock in the morning. It was somewhere around that. It was definitely deep into the night. And I ended up having some back and forth with now who I would consider a wonderful friend. And we are working together and really enjoy it. And Robert put together a 1-hour video collaging, and we provided a lot of relief for me. Wind underneath the wings. Robert, I want to tell you this, Rob. I think you are, and so we have had so much going on, but I'm hoping that you are part of that Sunday strategy, because I think I'm going to make it a closed group pretty quick. So I just want to make sure you were in on it, because I know you pretty well participate with everything. And I got your email, and I will be following up Monday on that other stuff. All right, we better get back to the questions. Thank you. Thank you, Rob. I appreciate you. Honored.
All right, this is from Wes. We use ADP as an employee leasing company for payroll and insurance purposes. ADP files consolidated 941s for literally thousands of employees. Could I apply for an ERTC? We have 7 employees and received about $170,000 in PPP Loan funds in 2020.
So the short answer is yes, because the SBA did make it clear that those organizations like ADP, they don't qualify for the credits. And the reason is that they're not the common law employer. And ADP would know that. They're not going to claim the credits. Now, related to that, it is interesting, the approach that you will need to take on that. And I don't know the exact detailed process, because I don't have any clients except one that was with ADP, and they were just doing the payroll. So when I looked at it before, it was that you would file the form 7200. You're going to run into some issues though, because you're not filing a form 941. So that's a long way of saying I'm not sure of the exact mechanics of that, and it's because it's a rare circumstance. But the real answer to your question is yes, you do qualify for the employee retention credit. It will be then filing the form 7200. There probably in the instructions will be some exceptions that you'll need to disclose, probably in that middle section, because you won't have a form 941 information to provide with that. But 7200 is going to be the route you go on that. So maybe check even with ADP, because you can't be the only customer of theirs that is that. So the short answer is yes, you qualify. Mechanics, dig in, and hopefully you'll be able to find it quick, but I'd get after it.
This is from Richard. We had a formal shutdown, but my business was essential and remained open. Can I apply for ERTC?
Well, if you're 100 or less, you're under a different set of rules. The rules are vague in the sense of these rules are meant to help businesses in these troubling times, especially in the first shutdown. So if you're a company that was considered essential and you're in a set of circumstances where you feel as though you would benefit from it, you were closed, you were affected by COVID, you're just making more of a case for yourself. So if you go to, this is for individuals that were in the seminar. So in the seminar materials, and Scoop, what's up? All right. In the seminar materials, I have a link to the IRS website where it walks through the details of those things. So unfortunately, I will just have to say on any of the questions on the shutdown and would it count and being essential, you're going to see that the federal guidelines are very broad and you'll have to look to your state. So I'm kind of going on about this one because if we have other questions related to that, I'm going to refer back to this briefly to just say that on that, it depends on your state. My office, we looked at it very carefully and we determined that the shutdown that qualifies for me and my clients is a shorter period of time than maybe what most are coming up with based on our calculations of it. And so with that being said, I wish I had a better answer for you other than you should qualify if you're 100 or less. Find a way to qualify. It's meant for you to qualify, but go through the seminar materials specific. I gave you a link specific to the IRS portion of the website that addresses that you can go through those FAQs.
Okay, this is from Brenda. We are a Blue Moon Pet Resort LP operating under an LLC. I am a partner in the LLC. I have paid myself paychecks with withholdings. I based our PPP 1 application including my pay. Did I do this wrong? We filed 3 tax returns, 1, the LLC, 2, the LP, and 3, the individual. They are all Schedule K1 Form 1065. I'm worried that my original application was off because I included myself in the calculations.
Well, with the partnership, you are able to include yourself. Is on the Schedule K1, if 14A, which is self-employment earnings, has an amount in it, then that qualifies for the inclusion into the PPP request in 1.0. You do reduce it down for Section 179, which is just a technicality there. So you did include it. It sounded as though you said maybe you paid yourself wages. So you're going to need to look into that immediately. I don't want to alarm you, not going to jail, didn't do anything illegal, but many people use the word wages maybe too liberal in the sense of they call everything. Many people just think when they pull money out of a business, it's wages. I'm not saying that that's you, but a partner cannot, by law, pay themselves wages. Why? Couldn't tell you. Other than the IRS, it's clear, no opinion, you can't pay yourself wages. And here's then the problem with a partner that pays themselves wages. You have to pick it up as income, but it ultimately, technically, would not be a deduction to the partnership. Doesn't sound fair. It's not. Don't pay yourself wages if you are a partner in a partnership. Don't do it. Stop. Now, you may have just meant that you were pulling distributions, and that's okay, or guaranteed payments. But 14A is how you include yourself in getting PPP 1 and PPP 2. And then the inclusion of PPP forgiveness, according to the SBA guidelines that came out on October 13th. In fact, they're the FAQs that you can find on the SBA website. But the FAQs that came out on October 13th has a specific section that talks about the partnerships. In the seminar, I gave you a link. It indicates the link SBA FAQs. So go to that. I think it's on page 6, and it talks about the partnerships. So check that out. Hopefully that helps. The long and short of it is, sounds like you should have included yourself if it was in distributions. If it's the wages, I think for PPP purposes, you're still fine. If you paid yourself wages for PPP purposes, you're probably fine. I would probably, though, get with your CPA, EA, tax professional, and maybe clarify why you're paying yourself wages. And if you're dealing with somebody and they're like, oh, you can pay yourself wages, let this be the last year that they do your stuff, because they don't know what the hell they're talking about. And go ahead and let them finish up 2020, because you're not going to find anybody to do it for you. But then you start searching for somebody new, because that's somebody that doesn't even know the basics of how a partnership would work. Sorry to say.
Want to say real quick that
Yesterday's tomatoes
paid another $5 and asked the question.
Yep, let's go.
When would the videos be for sale for today's seminars at a discount and similar to the strategy? So I told them that we will notify everyone when they go on sale, but they will not be at a discount.
Yeah.
They'll be the same price.
Yeah, I know that Amanda's made a great point to me on that, which is we don't want people to not attend the live so that they can just attend the video. We don't want to cheapen the information. But the videos today, and I appreciate you asking, the videos today, I mean, it was 3 hours of stuff. But tomatoes. Yesterday's tomatoes. Send me an email if you would. Put yesterday's tomatoes in the regarding line, please. And we'll follow up with you as a special thanks. And what's the next question?
Well, we'll give a big shout out to Brad Wright and a big thank you for sending an avocado sticker for $5.
Well, I love it.
Keep it up.
I love it.
The next question is from Mike, and it's and he asked, do payroll costs include leased employees?
Yes. So the leased employees, as long as you are the common law employer, in the sense of that you're the one that controls and hires and fires. If it's a temp agency, which doesn't sound like it is, I don't see that qualifies. But if you are running your employees through, when you say leasing, a lot of people will call it a PEO, professional employment organization. So if you're the common law employer, then yes, you would be able to include it. What you'd want to get from the leasing company is the specific information that goes on their W-2 or the equivalent of that, meaning you're going to need to know what their gross wages are that would then qualify. So just get that info, which shouldn't be hard, and you will be able to include it.
Okay, the next one, I will talk a little louder since people are saying they can't hear me.
Okay, well, oh, you know what? Try this one. How about that one? We got our Yeti Blue. All right, I switched it. Maybe they'll be able to hear you now.
This is from Wanda. If my restaurant is still limited to 50% dining capacity by our governor, am I still able to take the ERTC if I filled out my 7,200 with an incorrect, more than I should be amount? How do I correct it?
So you'll need to look at the guidelines and the link that I gave you. I don't know why you wouldn't qualify, but every state has differences on what they're doing. And so go to the guidelines. The IRS has done a good job of trying to give you as many examples as possible to line up with what's going on with your state. I don't know why you wouldn't, but you need to verify that with a little more research and matching up. Now, on the Form 7200, assuming you qualify, don't know why you wouldn't, if you took an incorrect amount and already submitted it and you got the check back, then you correct it on your next Form 941. If you've already filed Form 941, then you will file an amended 941, which is a 941X. And 941X, if you get it filed by February 1st, it'll be an ollie oxen free in the sense of you will have made it whole. So hopefully that helps.
Okay, we had Ken Chapman paid $5 to ask a question.
Okay.
If a hair
Thanks,
salon,
Ken.
If a hair salon is forced to go to 25% occupancy by the state, but sales aren't down, do we qualify for ERTC for 2020 and 2021?
So the short answer is you should, and you'll just want to match up the guidelines. So if you go to the IRS website, and if you will send us a quick email, I can send you the link. It'll probably be tomorrow, but put in the email, what's his YouTube name?
It's Ken Chapman.
Oh, okay. So put Ken Chapman, and it's a salon.
Mm-hmm.
And I'll send you the link, but I'll tell you this right now, you can find it just as easy if you go to the IRS website. There's a section specifically to ERT. They have a section that talks about the rules and the guidelines related to that. So match it up. Don't know why you wouldn't. That's what it's all about. And the ERTC, there's two ways to qualify. One is that you have a government shutdown. The other is that your gross receipts are down. With the new stimulus for the employee retention credit, and I'm just going to tell everybody in general, so thanks for your question. Now I'm just going to give a general comment related to the employee retention tax credit. So in 2020, it remains 50%. It remains that it's up to $10,000 in wages of a 50% credit. So it'd be a $5,000 annual maximum credit per employee. In 2021, they extended the employee retention credit for the first 2 quarters, and the $10,000 mark is per quarter, and the rate of credit is 70%. So first quarter, it can be up to $10,000 in wages, 70%. There's the credit. Then it starts all over in quarter 2. And you get up to a $7,000 credit on up to $10,000 in wages. But it's still the 2 qualifications. There's a lower threshold to jump over in 2021, which is that your gross receipts need to be down basically more 20% or more. It's 50% or more in 2020. And if you're closed down, you qualify for it that way. And when you are closed down, it's only the days that you're mandated, and then that's where the quandary is. So know this, the spirit of the deal, as I say, the purpose of employee retention credit is to help businesses like yours back to the salon. So dig deep, get with your professional, and see if you qualify. It just seems like you should.
All right, shout out to Carrie Latimer.
Hey, Carrie.
Who just gave $3, and shout out to.
This is Carrie, right? We've been up. Carrie gave this to us?
I think so.
Yeah. Look, I actually had it to show off, but all of a sudden I was like, see, I can't see names.
I know.
I can't see the names, and so if I don't see the name, then I'm like, well, wait a second. So Carrie, I had this right
Yes.
there.
Yes.
Yeah.
All right, and.
Thank you, Carrie. Carrie gave me this. Look at this. This is this awesome thing. All right.
All right, Justin Cobb, who was on our seminars today, just gave $60.
Oh
And
my gosh! Well,
Justin, I do have your email here, so I'll get your question in just a second.
We'll do it right after this.
And then Diane Muse paid $5, and Sherrill Star, I see your $5 and that you asked a question, so I will get to yours. And then we have so many people that are sending in money with questions, so we will
Okay.
get to you guys. I see you, Adam, that you just paid $5, and that Aline just gave $50.
Oh gosh.
So we
Wow.
appreciate you guys. I'm working both things. We're gonna get to both of you. So I'm gonna take care of Justin
Yes.
next. He asked a question in chat, but then I think he hasn't emailed one too. But we'll do the one in the chat, Justin, because everyone gets one question. If company received loan payment from another business that it lent money to, is that included or excluded in gross receipts? Same question for income that was paid a quarter later than invoice.
Okay, so you need to say it one more time.
If company received loan payment from another business that it lent money to, is
Nope.
that included?
Yeah, no way, no how is that considered gross income or gross receipts. It's a loan payment. And if there is intercompany, that really would probably easily fall outside the calculation of determining your gross receipts. So if you have intercompany, which would be 50% or more common ownership, I would consider that those gross receipts potentially, depending on the facts and circumstances, probably aren't really the kind of gross receipts that would be considered for the pandemic, which just probably works to your advantage, is my point, in the sense that if you get money from a related company, you control both. I would think for these purposes, wouldn't it really be, in essence, the spirit of the deal, I would say, that would be considered gross receipts. And I mean that as I think it would help you. And then he had an email as well.
Well, he said same question for income that was paid a quarter later than invoice. Did you already answer that one?
Oh, okay. So the SBA indicated that the timing of when you recognize your revenue would be consistent with your tax basis of accounting. And so if your cash basis of accounting, you recognize that income when you receive it. And so you would recognize it for the purposes of the 25% test when you receive it is the official answer. So regardless of when it got invoiced, when it's collected is when it would go into the gross receipts. I had wondered if maybe the SBA would have some allowances in there where potentially if income was earned before the pandemic, collected after the pandemic, maybe that wouldn't be something included in gross receipts because that would throw the numbers off. But the SBA in the interim final rules that came out at this point, maybe 48 hours ago, they did indicate the only reduction that will be allowed against gross receipts will be returns and allowances as reported on the tax return. And so if you look at whatever you file, there's always a line item 1B for returns and allowances. And so that would be something that would be a reduction there.
All right.
And then did he have an email too?
He did, but I think you just answered
Okay.
that.
So let's do this. I know that for those on the seminar, we're emailing them, so I'm not as conscientious, but I think what we need to do to ensure that we accomplish our mission is we had someone else that gave.
We have two
Okay.
more that I can see. There
Okay.
may be more.
Well, what I'm saying is somebody else gave what, $50? Okay, I thought.
2-5. Yeah, I said that. We had Aline gave $50.
Okay, so what's Aleem's
She
question?
didn't have one.
Oh my gosh, Aleem didn't have a question and gave $50. Well, thank you so
And
much.
then,
I was gonna bump you up.
Oh.
So what I was gonna say is, if there's a way we can track who gave, right?
I think
I mean,
so.
like we could go back and see.
After the live, yes.
Oh, after the live. Okay.
I
Maybe we should write them down. Here's what I was gonna say is, we need to keep going through the ones on there, and maybe we'll write down and then we'll get to them maybe in about 20 minutes or so, because we do want to get to our questions for the people that paid for the seminar today. What do you think of that plan? Write down the ones that
Yeah, I'll
gave, and we'll get to them here in just a little bit.
This is from Angie. We have 14 employees at our S Corp. We received the first PPP and used the 24-week period for forgiveness. We also received a $10,000 EIDL grant. We more than surpassed the requirements for forgiveness. When forgiveness was paid to the bank, they excluded the $10,000 EIDL amount. We had to accept a loan to our bank for that amount. My question is, will the SBA forgive this retroactively due to the new law that was passed in December?
So the short answer is wait to be seen. The long answer would include, I'm confident the SBA will make that right, if you will, or make you whole. It's probably going to take a little bit of time. I wouldn't worry about it. What I would do is follow up with the bank. So the bank, in essence, got paid the difference. They got paid by the SBA for the amount you got forgiven, and then they're now carrying a note for $10,000. So your bank's going to be as motivated as you to get that off their books. So be sure to alert them. I'm sure they're going crazy with a lot of stuff going on right now. And maybe just with courtesy, I know you will, but just be diligent potentially in your follow-up. I would at least just make them aware of it. Ask what paperwork you should file. Give them a couple weeks maybe, because here's the deal. Ultimately, you won't have to pay any interest on it. Ultimately, you should not worry about it. Ultimately, you should get it rectified. But here's the thing, the bank can't just do it. They can't call the SBA and say, hey, we need you to fix this. The SBA right now needs to come up with how they're going to fix it. So with that being said, just stay a little diligent, give the bank a little bit of breathing room over the next couple of weeks. Don't sweat it, but stay after it. And again, the bank will be more motivated than you because they'll be happy to get that loan off their books, especially at a 1%.
Okay, this is from Tammy. I did not understand fully if LLC partner tax as a partnership qualifies for ERTC or family sick leave credit. Their guaranteed payments would be included in calculations, or is that just for W-2 employees?
So great question on the partnerships. The owners will not be able to participate in the employee retention credit. Doesn't matter if it's an LLC or a partnership or an S Corp or a C Corp or sole proprietor or Schedule C, Schedule F, you name it. Owners and the relatives of the owners, no matter how unfair, do not get to participate in the employee retention credit. They do, all of the ownership in any of those that we just mentioned. And remember, an LLC, and you did great because you said an LLC tax as a partnership. I love that. We talked about it at the beginning of the seminar that an LLC just talks about your legal designation. When you're dealing with PPP 1 and PPP 2 and the forgiveness, you want to be able to actually follow the rules of how you're taxed. So the person who just asked this question did it beautifully because I know exactly what we're dealing with when you say you have an LLC taxed as a partnership. Now here's where we're a little bit up in the air, or at least I think we are. Yes, the partners do qualify for the sick leave as well as the family leave. Where that's claimed seems to be a little bit up in the air because that self-employment income tax, if you will, or the self-employment tax is down at the individual level. That's where that self-employment tax is paid for that partner. So my thought process is that that would be a credit down at the individual tax return level. So that's where I would start. We know that the IRS is working diligently with the ERTC with a major override of this, especially moving forward and requiring new forms, and they've got to update all the instructions, et cetera, et cetera. But I would expect them moving pretty quick, and I bet within a week or so we'll have better clarity related to the partners. So in the seminar, I gave you a link directly to the IRS website to the section that talked about the employee retention credit. So that's where I'd keep an eye And you'll know that they updated it because if you go to the bottom of the page, the IRS is spectacular at updating, or when they update a page, at the bottom of it, they indicate as such. I'll be right back. Hey, I know that I don't know if
That's just low battery.
okay. I don't know if Rob is still on at Philadelphia Salons, but when he put together the video for us, that hour-long video, we got one down here. One of the things that he included was what I'm getting ready to say. You remember, Rob? I'm sure he does. Hey, Coop! You turn the music down? Or close the door? No, that's all right. That was like reminiscent back in the early days. Back in the day when we had, we might have had, I mean, I got excited if we had 35 views, let alone a 500. But anyways, if I sit down like this, am I still in it? Or now do I look?
No, you're in it.
Amanda's doing awesome here because she is trying to keep up. Let's do this, Amanda. Okay, let's just focus in on the emails and you can catch back up on the live discussion if that's okay. Let's just go hardcore for about 15 minutes here on our questions and you can just focus in on our emails. Does that work for you, babe?
Yep. All right. This is from Austin. Can you expand on not being able to use payroll for both ERTC and PPP forgiveness? If I use payroll for PPP forgiveness, I cannot then get the ERTC for that time period.
You nailed it. So it's just like anything, it's always been the case that if you're going to take any kind of benefit on wages, the wages can only count for one thing at a time, meaning that day is burned either for one of the credits or PPP forgiveness. So I do want to clarify because I think that this is what you're alluding to. So you did nail it that you will be able to take the employee retention credit even if you got PPP. However, you have to do this extra step for whatever reason because in the Consolidation Act, it indicates that you're required to elect that payroll out of PPP forgiveness. And what does that mean? Well, we don't quite know, other than you're not going to be able to include the payroll that you use for the ERTC as payroll for the PPP forgiveness. So think of it this way, you're benefiting, as you know, from having PPP, paying that employee, and therefore those wages, when you're in the covered period, are automatically deemed with no choice of ours as PPP forgiveness wages. Not just the wages that were used from PPP funds, because Consolidation Act makes this clear. During the covered period, all payroll, regardless of sources, at 24 weeks, it has a clear distinction and it's deemed for PPP forgiven purposes. Means it's available for and it's considered to be used for PPP forgiveness purposes. So what's that mean? Well, if someone gets $5,000 PPP loan as an employer, and in 24 weeks, because they've changed, they have $1 million of payroll. They got a $5,000 PPP loan 1.0, but they end up having $1 million worth of payroll because their PPP was based on 19 when they hardly had any employees. The thing to note is that under the law, that 24 weeks of covered period, the $1 million of payroll is deemed for PPP forgiveness purposes. Doesn't matter that it's more, doesn't matter that the 5,000 would have been used up in a very short period of time. Why is this important? So for the employee retention credit, we have to elect that payroll that we want to use for the employee retention credit out of the payroll that is automatically deemed for PPP forgiveness. Yeah, you're right. Seems illogical, like what's the extra step? Might have just been being a law put together quickly, but we do expect we're going to get some easy guidance probably on that, not a big deal. Just know this, whatever wages you're using, whether it's ERTC, any other credits, any of them, you wouldn't then be able to use those wages for PPP forgiveness. It's just that the ERTC has this extra step of an election to pull it out of the wages for PPP forgiveness purposes.
This is from Adriana. I'm a sole proprietor, LLC, Schedule C, received PPP 1, but I only applied for the employee payroll. I didn't include my income from line 31. With PPP 1 extension, can I still apply for my income?
Yeah, so what's interesting out of the stimulus, the Consolidation Act that was put into play, and on the SBA website, the PPP page, they actually have a separate application that's called for first draws, and then they have an application for second draws. So for the first draws would be what you would look to, and the way I understand it is this: you are able to go and reapply if you already applied and received PPP 1 and you have not been forgiven of that. So if you applied for PPP 1, included your employees' wages, but then now have been forgiven, you won't be able to do what it is that I'm getting ready to say, which is you would be able to reapply. Your reasoning is you didn't know, or you didn't include, or didn't have available your Schedule C for 2019. So yeah, reapply, and then also use that information to, if you need the relief and if you have the gross receipts that are down, hopefully not, but if they are, you'll be able to qualify for PPP 2. I am telling people this: if you can reapply for PPP 1 and you do qualify for PPP 2, get PPP 2 out of the way. Don't try to do both. The banks are going to be working fast and furious the next week. The reapplication process is new, it's not normal, it's outside the norm. The PPP 2, the wheels are greased right now, meaning portals are going to open and they're going to be focused in on that. So secure your PPP 2 if you qualify. Once you get that, which is going to be in short order, then start working on the PPP 1. That's just my opinion, my recommendation. Now, of course, if you don't qualify for PPP 2, then yeah, just get after the PPP 1 reapplication. Again, I know that some people are like, oh, you don't have to wait and you shouldn't wait. I'm talking like, it's like 5 days. Everybody should remember, when you apply for PPP, money comes really quick. So when I say just wait, it's waiting, 4, 5, 6 days. So that'd be my recommendation. Feel free to do what you think's best with your bank. Definitely communicate to the bank that you want to reapply, because maybe it's easier than I thought. It's brand new. Literally, the applications have come out within the last few hours.
This is from Bob. You can sit down. You want this one to sit down on? It's higher.
Is it higher? Okay, you go ahead.
Regarding the PPP 1.0 forgiveness calculations for employee gross salaries, is the gross salary the total paid for the 24 weeks or just the salary paid using the PPP money? We paid about 10 weeks of salary using the PPP loan. The remaining weeks were paid by the business.
Yeah, great question, and I'm glad that we're getting asked this for the clarification. What the SBA wants from you is, and expects from us, is that covered period, whatever your payroll is, that you include it in your PPP forgiveness application. The first thing is it's going to make it fly through with flying colors. Boom, mic drop on that one. But with that being said, the government doesn't see it as, here's the wages that were paid by PPP, here's the wages that were paid by the business. I see it that way, you see it that way, but the government sees it as any payroll during the covered period is deemed for, and it's to your benefit, but is deemed for PPP forgiveness. So yeah, throw it all in there. That's what you're supposed to do. And then your PPP forgiveness, because you described your circumstances, that forgiveness is going to fly through. Easy squeezy. So definitely include it. And there's nothing wrong with, at the end of the day, including whatever amount of payroll you did pay to achieve forgiveness. But what I'm doing with all of my clients is whatever was paid, boom, we're throwing it in there during the covered period, and then you just let the calculation work itself out. Thank you, Amanda.
Welcome. This one is from Richard. Assuming I'm going to get full forgiveness on my PPP loan, what are the QuickBooks accounting entries you would recommend to an account for processing of those funds? It is sitting as a loan on the balance sheet right now.
Yeah, so great question. I'm going to try as soon as I can to do a video on this. I've got a number of seminars that I'm working on. I'm just going to plug it. I've got 2 tomorrow, Saturday, for the self-employed, covering PPP 1 forgiveness, PPP 2, and the sick credits and the payroll, or scratch that, the family leave credits. I've got a strategy. There's a reason I'm telling you this. On Sunday, I've got a strategy seminar, and then on Monday, I'm doing how to apply for PPP 2.0 special seminar just for the self-employed, and one just for the employers, packed with the how-to, the calculations, the worksheets. So I say all that to say this: I forgot the question.
Assuming I'm going to get full forgiveness on my PPP loan, what are the QuickBooks accounting entries you would recommend to an account for processing of those funds? It is sitting as a loan on the balance sheet right now.
Thank you, Amanda.
You're welcome.
Did you tell everybody that I didn't even sleep last night, but maybe
Yeah.
45 minutes?
Maybe that, yes.
So I'm going to do a video on that. Is what I got carried away talking about. I was going to do a video on it, but I've got the seminars going on. So if it's sitting on a liability, which is where we would have hit it when the money came in, because it's a liability till spent. So what I'm doing on my clients, okay, is I am just making a direct adjustment from the liability account to the equity account. Now, let's be clear here before people lose their minds when they hear that I'm saying equity, because right now I'm talking about what are we doing on QuickBooks. I'm not making any other statement right now, but on QuickBooks, the way that we're doing it is that we would debit the liability to reduce it down, of course, and then I'm going to credit. It will be an equity account, but I'm going to call it a PPP adjustment as a separate line item in the equity section. There's really no other place to put it. You know as well as I do, it's got to close through retained earnings, or it's going to sit on the balance sheet forever. And even if we were to stick it on the retained, scratch that, even if we were to stick it on the P&L as tax-free income, well, it's going to wash through retained earnings. So that's the entry, that's the simple. Now, I'm not showing it on the P&L, and here's why. It's going to, in essence, distort that client's P&L. That's why I'm not putting it on the P&L. It doesn't need to be included in gross receipts, as you know. I don't want to include it as a negative expense because it is no longer that. Now, on the tax return, here's how I believe the new law requires us to do it. And I've looked at it a couple of different times, and in the seminar, if you look at the video, maybe the last 20 minutes, someone had a minorly similar question. But know this, it won't be able to go in the AAA account. So on the tax return, it'll wash through retained earnings on Schedule L, which is book, okay, it's per book. You probably know this, balance sheet per book. I'm going to put it on the M1, that loan. I'm going to put it on the M1 as tax exempt income. Why? Well, it needs to go there. I understand it's not going to match up with the book income. Long story short, this is how I'm going to solve it. Some may have other opinions, and guess what? It doesn't affect the taxes. So how it flows, how it reports, at the end of the day, it's all going to wash through retained earnings. The law indicates that we don't get an increase in basis for the forgiveness if it results in an increase in basis.
Okay, This is from Pavan. I read somewhere that the new act passed in 12/20/20 will now pay for 5 months of principal and interest for SBA loans. Does this apply to EIDL loans we got in 2020 due to COVID-19?
Great question. It does not. This applies to SBA 7A loans. And I'm going to grab my notes because I think it's only for 3 months. I'll be right back. I'm without one shoe, by the way.
I see that. Yes, we would appreciate everybody giving us a thumbs up, and that just pushes this video up so more people will see JJ the CPA's video. Thank you to everyone who has already given a thumbs up.
Yes, thank you. So fun to be live, but I don't like the camera being backwards. It is 3 months in the consolidation that it'll pay, but not on the EIDL. These are on SBA 7A loans, traditional ones, which just means that these were loans that were in existence before the pandemic that were gained not through the economic injury disaster loan. It is in essence the traditional SBA loans, but here's what's nice is that there is the 6 months to it was 6 months that was paid. In the stimulus bill, it indicates that the amount of payments that were paid by the SBA to cover these loans, principal and interest, is not income. It is not considered taxable income to the company that's getting their payments made, and they get to deduct the expense related to it, which would be the interest. That's just a way to say that they've extended it 3 months. So those payments will continue through March 31st.
Now they can hear me, but they can't hear you. So there, they can hear me typing. Sorry, that's my nails. Okay, did you answer that one?
I did.
Okay, this is from Eric. Regarding ERTC, we are a behavioral health agency, no idea who considers us essential. We used to have a social group for clients. Our state limits group sizes. Can we use that as a reason to qualify?
May not be enough of a reason. So during the seminar, go to the link where I clearly state in the ERTC section in the link, and it says IRS, COVID reasons for shutdown or government shutdown or something. So take a look at that. Based on recollection, that may not be enough to qualify you. There is a clear standard on what kind of governmental orders then allow you to qualify for the credit. So I bet it'll shake out pretty quick if you'll check that link out, read through. It was also in the checklist that I sent you. I copied the entire amount. If you look at the bottom of that checklist, the first document that you got a couple of days ago on the documents to bring to the seminar, it was like maybe, 4 or 5 pages of a checklist that can be used at any time. Anyways, it's also at the bottom of that, and I also put it into the PDF slides. So anyways, you got 3 different ways to check it out. And also I've known that, I'm just now remembering, some states, the associations for the profession are doing some of the legwork to figure out if they qualify.
All right, this is from Lisa. Hello, JJ and Amanda. I have a question for you regarding ERTC. My business is essential, therefore I opened most of the time. I have used the PPP loan up to the end of the 3rd quarter of my 2020 to pay for payrolls. My covered period was from May to October. We are an S-Corp with 2 owners and 2 employees. In the 4th quarter of 2020, there was no lockdown, but my gross revenue was less than 50% compared to the 4th quarter in 2019. So can I take the wages for the other 2 employees for the pay period for the tax credit. Thank you so much for the seminar today. I've learned so much. It was very valuable, and I will definitely enroll in future seminars.
Well, I really appreciate that. I heard the entire question. I had a rock in my shoe. I just went off camera to put my shoe back on, but I heard the entire question. Thank you for all the detail in that. What I liked in that question there, Amanda, is that it was enough detail to know their circumstances, but it wasn't so much detail that I feel like I'm giving specific advice, which I'm going to be more careful about as we move forward. With that being said, the short answer is yes. What I love there is that's the first time that I've come across the circumstance where you've used up your PPP. So you've used it up. Most of us that are looking at the ERTC, it's during the shutdown. So if your revenue is down for that quarter, you qualify for that quarter, and you're correct, it wouldn't be on the owners of the S Corp. It would be on the employees. And then remember, it's a 50% credit, so up to $10,000 of those wages at 50% would be your tax credit. Now remember this, you should get on the stick, file that Form 7200, mark it fourth quarter, put your line 1 employee retention tax credit, which is the wages during the quarter that were not under PPP, and therefore times 50%, and fax that puppy in. If you have a company doing your payroll and they've already filed Form 941, well, then you know we're not able to then send in 7200 because the IRS indicates clearly in the instructions you can send in Form 7200 until February 1st for quarter 4, but you can't send it in any later than when Form 941 is filed. So if Form 941 was filed for fourth quarter, then you want to get with your payroll company and have them file a 941X. Great question, I appreciate it. And sorry your revenues were down, by the way.
All right, this is from Ed. I have an LLC taxed as an S Corp. Form 1120S, I don't have any W-2 employees, but just independent contractors. I don't see in my forms a W-2 for myself, but I have a personal 1040 with a Schedule C. The income from my S Corp is on my 1040 Schedule 1, line 5 as additional income. Is the PPP forgiveness based only on my Schedule C on my 1040 divided by 12 times 2.5?
So that's a little bit of a predicament there. The first thing is, I think you were alluding to, and thank you for indicating how you're taxed. I appreciate you taking to heart what I had said at the beginning of the seminar, so I know exactly. So you know those that you paid 1099s to, that doesn't qualify the S Corp for any PPP. If you don't have wages out of the S Corp, this is where the S Corp and the S Corp owners were on the outside looking in, so to speak, because it is Paycheck Protection Program, no wages, therefore no PPP up at the S Corp level. You're correct. That would be the same for PPP 2.0. Now, down at the S Corp level, if you have a Schedule C and you have self-employment income, then that line 31 would qualify for PPP. Now, one of the things that I just want to mention to you though is outside of this and has nothing to do with any of this, is that I want to say 2 years ago, the IRS indicated that that will not be suffice for S Corp owners to not pay themselves wages, but then 1099 themselves and report it on Schedule C. Now, you probably win the lottery potentially before you got questioned about it, but I don't play the odds of catch me if I get caught, you know, catch me if you can, I mean, and I know you don't either. But what I want you to know is that whoever's advising you to do that, let them know that you're not going to continue to do it. The reason why is this. The amount that you're deducting, that you're paying yourself, and I'll tell you this right now, I used to use it as a shortcut myself, meaning the S Corp owners that I worked with, if they were just a one owner, or they just weren't going to want to do the payroll, or they didn't want to pay the payroll company and all that stuff, the ones that I just couldn't get them to budge, well, what we do is we 1099 them at the end of the year. And then why? Well, the reason, and this is a good lesson about S corporations, but the reason that you need to pay yourself wages out of an S corp is, in essence, that's what allows for you to have the tax advantage of the net income from an S corp not being subject to self-employment tax. Now, it's not contingent on wages, but there is a requirement for reasonable compensation to be paid. That's where the crux is. But used to take the shortcut, meaning it was perfectly acceptable that you would 1099 the owner, because then it created the same effect. It created self-employment taxes, which is Social Security and Medicare, which is the same thing as if the business had to pay Social Security and Medicare on the wages, and then it was withheld. So in the grand scheme, we think, oh, well, it all came out the same. Well, it doesn't. The IRS doesn't see it that way in any way, shape, or form. And so what the IRS indicated maybe 3 years ago is that they will not recognize the 1099 income paid to the owner. Now, when I say they won't recognize it, I mean they won't recognize it as reasonable compensation paid. So probably the reason that you're doing that is either your CPA, EA, or tax professional, and there's still a lot of out there that do it that way. So it's not that they're doing anything wrong, they're just taking a shortcut for you. It's not going to get you in trouble or nothing, but what it will do is that in the event that you are inquired of by the IRS and they are paying attention to this line 7 item on the 1120S for reasonable compensation for an S corp owner, is that they're going to say, hey, well, you didn't pay yourself any reasonable comp, and they then could reclassify some of your distributions as payroll. Now, I'm just going to be honest with you. I'm not dogging on whoever's doing your taxes, because they're just helping you out. But at the same time, what you need to do is start paying wages. So it's kind of a, you need to walk the walk and talk the talk. So let me be the one to tell you, you can't take the shortcut anymore. Feels like it's easy, doesn't make any difference. Well, it does. And the IRS knows this. You didn't pay yourself wages. It's simple. They have all the information. They know the K-1. They know what your distributions are. They know what line 7 is. They know if you got W-2. So not going to jail. You're not going to be in trouble. No one's knocking on your door. But it's not how it's supposed to be done. So that's the reason I'm just going on about it, because I'm just looking out for you. So here's what you want to do. Happy New Year. Start paying yourself W-2 wages, and then your PPP will just be based on the Schedule C. You need to head out.
This is from Graham. He did ask 2 questions. I'm going to go ahead and let him go, because one of them is, are you having a seminar on FTE calculation, or is there a link on a web page?
I'm not going to. I can't. I guess maybe they were in the afternoon. Okay. So what I had indicated is email me what your question is, and I will solve it that way. The FTEs really have become a non-issue for most, so that's why I didn't really spend any time on it. I did talk about it, so email me back, let me know what your question is, and we'll solve it that way. But that's how I will solve it on the FTEs. And I think that I had indicated in one of the seminars that if I don't cover something on the FTEs and you want it to be covered in today's seminar, to email me, let me know, and I'll solve it that way.
His other question is, there was discussion of 24 weeks. Does the 24 weeks include accrued and paid? Are we limited to only including 24 weeks of payroll? We pay weekly, so if we include accrued and paid, then we would actually have 26 weeks of payroll.
Yep, it's incurred and paid. And you know, when you're doing the alternative method, alternative method for payroll, it's to line it up, but it doesn't change the fact that your covered period is still 24 weeks. It's paid and incurred. So what I would recommend is, you out of here? Yeah, you're all covered up. How about that? You want to say hi to everybody? Okay. Okay. CJ the CPA, you know, these are people that have probably watched our videos because this is our hardcore group that's always tuning in.
Well, awesome.
Yeah.
I appreciate them watching.
Yeah. Were you heading out?
Yeah.
All right. You coming back?
No.
No?
I'll
Okay.
see you
Okay. All right, well, text me, let me know what you're doing.
Yes, I will.
Bye.
Bye, Linda.
He's 18, he can go where he wants. Okay.
24 weeks.
So, let me think on this for 2 seconds. Well, the end of the day, it is paid and incurred. And if you're picking the alternative method, all it does is it changes your time period. So what you need to know is that if you're doing the alternative method for payroll, it's going to line up. Now, it does mean that for whatever that new period is, weekly, 24 weeks. So if you got money on April 8th, but your payroll period is starting on April 11th as the alternative, and so you shift it to April 11th, then your covered period is April 11th plus the 24 weeks, okay? But then in that period of time, what's paid and incurred is what will be included. It can be more than 24 weeks, is my point. It's just that you are altering your covered period to the alternative, and then that's the period of time of paid and incurred.
Okay, this is from Cindy. Please, hi JJ, great webinar.
Thank you.
Please clarify that it is acceptable to use all payroll for full forgiveness. Is there any harm in doing so?
You can, and there is no harm now because there is no tax adjustment. I had done videos where I didn't want to include all of the payroll because I thought it might affect qualified business income wages, which we don't even have to worry about because there is no tax effect. So yes, you can, and it's probably what the banks almost would prefer because you'll be able to just go in and say, well, I spent it all on payroll. And here's the other reason why, is we know that you can't spend more than 40% on the rent, utilities, and the interest. You have to spend at least 60% on the payroll, but that's the at least, meaning if you spend 100 and then some, 100% and then some on payroll, that was really the intent of the entire thing. That's why you absolutely will be able to do that. No harm, and in fact, that's how I'm doing it with all of my clients.
Okay, this is from Zenny. We are a C Corp and granted PPP 1 and qualified for PPP 2 on the basis of gross receipt analysis. Gross receipts is down by 50% in quarter 2 of 2020 compared to quarter 2 of 2019. However, the payroll cost in 2020 is more than in 2019 by around $200,000. Our question is, if we apply for PPP 2, can we use the same information in PPP 1 using the 2019 as basis for determining the amount of the loan for PPP 2?
All right, so I think I'm following, and the thing to note is that there are two separate calculations, and they said they were down, right? Mm-hmm. Okay. So the first hurdle is one of the quarters in 2020 25% or more less than 2019? Sounds kind of weird, but it's quarter 1 for 2020, okay? Is it at least 25% less than first quarter 19? Now, I'm just giving you an example there. Ignore that I just highlighted first quarter. It doesn't have anything to do with the answers, just for those that are listening right now. So with that being said, that's one test, separate and apart. You qualify, you're done with that. Now you look at the qualification of your expenses, and you do pick the higher of either 19 or 20 for your payroll costs. So the gross receipts test has no effect on that. So if you have 1 year that's higher, as you'd indicated, then go with that amount. And sorry that your business is down. I wanted to show everybody, today in our office, for Christmas, I got these coasters. And these are made here locally. And we've got these leather coasters. They're totally awesome. And we've got JJ, the CPA. I got 4 of them, which is awesome. So Tanae is, as well as Alona and Cammie, supporters out of my office for that. So anyways, we just wanted to show those off. And Carrie was on. I don't know if Carrie's still on, but she caught me off guard. I wanted to actually show it off, but because I was going to show off a few things. But this is like the coolest thing ever, like total vintage with this wood right here. And what's interesting is this came, and when it came, some of the gifts that we get, you know, when they arrive, either the company that sent it didn't put in any information, but we didn't know who it was from. We're like, oh my gosh, it's like the coolest thing ever. So I had it up in my live, you know, if you notice, for the last while, as soon as I got this, it's up in my background. But anyways, I caught just a comment from Carrie, and she said, hey, check your mail, something like that, or Captain America in your mail or something. I was like, oh my gosh, that was her.
Yep.
So we emailed her, and Carrie's been a part of the backyard barbecue event that we did.
Yep.
And for Coach. And anyways, thank you, Carrie. I really appreciate it. And I don't know if Alyssa's on, but I was thinking about having some of that cake. All right, what's our next question?
Okay,
Amanda?
our next question is from Charles. I qualify for the ERTC credit for 2020. My PPP loan and payroll cost for 2020 was for the period covered 4/23/20 through 10/7/20. Can I use the payroll from 10/8/20 to calculate my ERTC credit for 2020?
So the very well laid out email, but I just want to verify that they're saying that PPP was used up 10/7. So he wants to know if you can use the payroll 10/8 and after. Absolutely, because when you're covered, well, is that when the covered period ended? Can you just read the very end of it?
Can I use the payroll from 10/8/20 to calculate my ERTC credit for 2020?
Did he say that his covered period ended on
My
10/7?
my PPP loan and payroll cost for 2020 was for the period covered
Oh.
4/23 through 10/7.
Yeah, excellently written question, thank you. So yes, when you're on 10/8, you are out from underneath the deemed compensation being for PPP forgiveness. And so yes, 10/8 and after, that would qualify, of course, through on or before 12/31/20 will be under those rules, and then 1/1/21 it'll be under the new rules as you follow. So great question, I appreciate that, and hope 2021 is good.
This is from Richard. I have an S corporation client that received a $315,500 PPP loan on April 8th, 2020. Client's 168-day covered period ran from April 8th to October 7th. Client fell behind with paying over his covered period payroll tax liabilities. When I filed the forms 941 for the quarters ending 6/30 and 9/30, the client had a large balance due each quarter. Client eventually caught up with his payroll taxes obligations and cured for the covered period. In terms of providing documentation to the bank for PPP forgiveness, if the bank requests forms 941 for the quarters, and I have to show the bank 3/4 of forms 941 that will indicate that as of the date of filing, there were large balances due on each quarter. Will this create a problem with getting the client loan forgiveness? And if so, how do I get around this? Client did eventually get current. Unfortunately, that is not reflected on the form 941s. I really enjoyed today's seminar.
Oh, well, I appreciate that. Great question.
He's
Great
a
set.
CPA.
Perfect. I'm always honored when I have CPAs and EAs and tax professionals on. It just at least lets me know that I'm putting together good information. So, great question. I love it that your approach is helping your client in every way, shape, or form. For starters, it is over the $150,000, as you noted. Therefore, there is going to be a request for the documentation. However, when we do the PPP forgiveness now, it is going to be that you will be able to provide the annual payroll. The reason we were having to provide, in my opinion, what my interpretation is 941s is because it was the only documentation that would be available if we were filing for forgiveness originally after the 8 weeks or in the summer or fall or winter. This was the other reason that I also have waited for my clients, is it's going to be less documentation for those that are above the 150,000 to pull together, in the sense of the W-2s, W-3 is what I would submit. That's really what they're going to be interested in. I do understand that there is the potential of an inquiry of Form 941 in the sense of them wanting to see if it fell during that time period, if you will. But I don't think the banks are required or interested in digging that deep. Let's just say that they do, though. Because it was paid, it was caught up, there should be no issue because of the paid and incurred. What's more important is that payroll, not the payroll expense for the employer, of course, but the payroll, so those taxes that were withheld and then were delayed in getting paid in, as long as those were incurred during the covered period, that's really the first main concern. And so if they incurred and then they were paid, and it sounds like in a short period of time compared to others that could go years, but within a short period of time, those taxes were made whole. So we know this on that paid and incurred, we can include expenses that were incurred at the end but paid after. And that's why I feel confident that you're not going to have any issues. So I don't think you took it this way, but I'm not advocating to hide anything from the bank. I doubt you took it that way. But I would just start out with doing W-2s and the W-3 because for the ones that I have that are over the 150, talking with the banks, we're going with that annual and then a payroll summary from the third party, and we're calling it good from there, and that seems to satisfy, because I think in the end, what ultimately is the larger concern is that the money was used for payroll and it was incurred during the covered period. So I think you got your bases covered, and thanks for being on. I appreciate it.
Okay, this is from Jay. Hey JJ, our business was subject to State of New Hampshire closure of non-essential businesses and required stay at home from March 27th to May 4th. We, however, were essential and stayed open. We also had a decrease in revenue of 9.8% for the worst quarter of 2020 compared to the same quarter of 2019. We have 54 employees. Do we qualify for ERTC?
Well, I don't know why you wouldn't. And if you said you're down 9%, of course that wouldn't qualify for you for the gross receipts. And, you know, the spirit of the deal, and I keep saying that, is with the ERTC, is that for the companies that are 100 or less employees, which you fall under, there's more leeway on that. And basically in the, I don't want to call it the CPA community, but the community that I'm keeping up with, that the rules related to this is not, don't approach it as how, let me say it another way. Here's what I've told staff in the past, okay? Don't tell me how it's not going to work. Tell me how it's going to work. So you want to approach this to see how it works. Now, sometimes it just don't work. Sometimes it doesn't fit, okay? But my point is that turn the thinking the other way. Don't look for a way that you don't qualify. I'm not saying that you are, but unfortunately, I'm not going to be able to answer that because I don't know the particulars of New Hampshire. You just described them to me on face value. It seems as though you would, but go to the link that I provided in that seminar on the IRS website. It's very well written. The IRS, I think, did a great job. They gave a number of examples. So I would go through that, match it up, and you know, at the end of the day, if you're 100 or less employees, it's liberal enough of a credit that it doesn't matter if you were open or closed, going gangbusters, losing your shirt, everybody was working, no one was working. So take a look at that, because 100 or less, okay, and you're involved in a government shutdown, I don't know how you don't qualify, but unfortunately, the IRS doesn't yet have a box that you check that says per JJ to CPA. So double check it, find the way that it works, because guess what? If you can't find the way, then it doesn't work. So some people get confused on that approach, but that's how I've approached my clients and doing my research. I don't approach it to find the way that it doesn't work. Why are we doing that? So I've had CPAs that have worked for me. I'm like, why are you coming to me and telling me how it's not going to work? That's not your job. Your job is to find a way for it to work. And then if you can't find a way for it to work, then I'll conclude that it doesn't work. So I don't know why you wouldn't. You should find a way that you do, but it doesn't mean then you just do it. So check it out. Ask around too for businesses maybe that are similar, or if you're in an association, and see if maybe they did some of that legwork. And but again, it's meant for you to qualify.
Okay, this is from Doug. If we elected the 24 weeks and just my gross payroll was more than enough to cover my PPP loan, do I need to add in the other employee payroll costs into my calculations? Thank you for the seminar today. It was very informative and very well presented.
Well, thank you. I appreciate that. Hey, well, great news. No, you can just go straight off that payroll. That's what I'm doing actually with my clients, with myself. I'm not going to really worry about it. Now, I will just tell you this. I do have a number of clients, and including my own. I'm still going to gather it up. You don't need to. Okay, I'm just telling you how I'm doing it, but I'm still going to gather up that other stuff. I'm going to have it in the file. Why? That's just being JJ to CPA. For you, boom, you got plenty. Include it, keep the folder, keep the file. If it's easy for you to pull your rent stubs, if it's easy to pull some utilities, and with 30 minutes you can have it. Why? Why would you want to do that, JJ? Why do all this extra work? Well, this is why I've never had an audit adjustment in 28 years. I'm knocking on wood, that's me. I've never had an audit adjustment on a return that I've prepared in 28 years. Why? Well, I'm going to hand in this PPP forgiveness application. I'm only going to use the payroll as in W-2 wages because it's more than enough. But guess what I'm going to have in the file? What I just indicated. Just at the end of the day, I'm just, why not? Because if I got it available and I can easily pull it together. So that's a long answer to a very simple question of yes, and thank you for the compliments.
This is from Jeff. EIDL loan. I qualified for 150K, but I only took 75K. Can you go back and get the remainder?
Yes, you can. I know early on, I would have people that would tell me that they did that, and I would say, man, you shouldn't have done it. I mean, just people that are strangers, because you can pay it back at any time. It's 3.75. You don't have to pay interest. I kind of look at it as, well, if you didn't take all of it, why'd you even apply for any of it? That was just kind of my approach. And why? Am I an advocate for debt? No, but I am an advocate that when a house is on fire, that we go ahead and get a hose to put it out. If you have a client and their house is on fire, I'm not going to be like, well, maybe you should get a hose that's about 10 feet long, maybe about 4 inches diameter here, let it. No, we're going to just get hoses, right? So my point is that when we're in a pandemic and you have the ability to get funds, then you should get it, especially if you can just pay them back. So there are those out there that wouldn't do that because they don't want to do the debt, but then they're in circumstances where now they need it. And that was the whole point of the EIDL. So anyways, all I'm saying on that is that you're not alone is really what I'm getting at. That was kind of the approach, I think, for a lot of people. It's part of being positive. It's part of, hoping for the best. And at the end of the day, get ready for about a 6-month process, so get after it. What you'll do is you'll call the SBA, and they are phenomenal with customer service. You probably won't even have to wait, but get your original loan documents, have your application number, call them. They'll say, okay, and then they'll send you an email. You'll provide some paperwork. You'll provide more paperwork, and then you just can't get frustrated. You just can't. SBA is working high speed. And in some ways take this tongue in cheek, you had your chance and you blew it. No, that's just a line from a movie with Sylvester Stallone and I think Robert De Niro.
I know, we need CSR on here to help you out.
Yeah, no doubt. All I'm saying is that I was visiting with somebody the other day that hired me for a phone consult, and he was just talking through the frustrations of it, and we had a good chuckle about it because it's like, well, I mean, you had your chance, and now you're wanting to go back, but go back, reconsider, don't delay. If you're asking, can I, that means you should. Get after it immediately because it's going to take time. You're going to have to provide some documentation. They're going to ask again. It's going to go from one agency to the next. Here's the great thing. You can check on it whenever you want. It won't make any difference checking on it, but you can still make sure that it's alive. But it's about a 6-month process. I've got one right now that they applied back in July, and it's been steady progress, right? Yep, we're doing this. Yep, checking credit. Yep, we're doing this. And still haven't gotten it, but got a letter saying, hey, you are approved for this. Just stuck with it. So at the end of the day, get after it. Yes, absolutely. And then I only went through all that to say that any of you that haven't gotten an EIDL, project where you're going to be in 30 days, 90 days, because I think the banks are going to be in a position they're not going to be able to loan out as much. It's not because they don't trust you, but we are probably looking at a summer collapse of a minor amount of urgency for those that have not had to pay rent, and now it's going to be due, and we're going to have evictions. And why? Well, it's because landlords haven't gotten paid, which means the banks haven't been paid, which means then the banks might have loans that are going under. And when loan goes under, they got to cover them. And if they're covering loans, they don't have as much reserves. So I've been talking about this, Amanda will attest, since the beginning of March. And I don't know why people won't take it more seriously, because I'm just seeing it slowly happening. People that I'm talking to around the country are reporting the same as what I had predicted, not taking credit that my prediction should be something to be proud of. It's just an obvious, and it happens in the past. And that is that money, it becomes more scarce, less available, if you will. So this is a time to look at your debt smartly. It may not pay to not borrow money right now, meaning you may not get it later. So borrow what you can. And then for those that say, well, are you advocating to get debt? Yes, I am. And you know why? Because we got houses on fire. And what I mean by that is that if somebody were to say, hey, your house might be on fire in a month, do you want to go ahead and get a hose? Would you like a big old hose? Now, for you to have a hose, you can give it back to us anytime you want, but we're going to charge you $1 for you to have that hose for the month. Well, if you had a pretty good chance that maybe your house is going to be on fire next month, I don't know that anybody would argue about, yeah, I'd want a hose there. You'd want the hose sitting there. You'd be like, yeah, whatever, it doesn't matter. If I got to pay a couple of bucks to have a big hose sitting there so that if the house is on fire, I can put it out. So for those that then criticize that, I want you to have some empathy for those that are in a position that they are concerned. You're not giving good advice by telling somebody not to get a loan. Now, here's good advice. Get a loan and then sit on it. It's not the time to go shopping. It's not the time to expand. It's not the time to buy a new car. It's not the time to do anything out of the ordinary. It's not time to give everybody raises and bonuses. I'm talking about getting a loan and sitting on it with the EIDL. Literally sitting on it. Because guess what? You can pay it back at any time. There's no payments for a year. And CSR would point out, I mean, you might owe a few bucks in interest. So if you're worried about a few bucks in interest, and I don't mean you, I'm now talking very much in general, then your house isn't on fire, and hope it doesn't get on fire, but then don't sit around and tell people that they shouldn't be getting loans. Now, I do know that we have some great listeners, and one of the things that they did right off the bat was get out of debt, stay out of debt, and saving money so they didn't have to go borrow money. But those are great circumstances to be in because you've built up funds. We have to remember there are plenty of people out there that don't have a pot to pour any water in. And unfortunately with small business owners, most of us don't want anybody to know that. We don't want anybody to know. We don't want our employees to know. We don't want our customers to know. Many times we don't even want our loved ones to know. Why? Because we don't want them to be worried. Why? Because you're a superhero, right? Every small business owner, right? Fighting for truth, justice, the American way, can dodge bullets, leap buildings with a single bound, up and away, right? And we enjoy that. That's part of being an entrepreneur, is that we enjoy taking care of others, typically. And so from this perspective, we need, as small business owners, we need to, as small business owners, realize that we can't always be perfect. Yeah, look at that thing. Look at this. How cool is that, huh? We probably need to come back with it. Let me see. Can you see it? Probably should.
Go over that way. There you go, right there.
Look at that.
Captain Phillips says, "Can I win that?"
What's up, Captain Phillips? Yeah, we got, boom, Superman and Iron Man and Captain America, Captain Phillips. And we got a little Batman over there. This is on vinyl. Pretty cool. So this was,
I mean canvas.
oh yeah. Vinyl. Yeah, sorry.
My honey's tired.
Yeah. So we got this, and it was a wonderful gift from a fan that we will leave. We will remain nameless. All right.
Yes.
What's our next question? And
Yes.
hey, so whoever was listening, I started talking general to everybody a long time ago. So hopefully you didn't take any of that as a negative towards you. I commend you. Is my overall point. So I don't know if you're still listening to this point, but I commend you for saying, you know what, I need to get the rest of that money. So get it, stay after it. We're in a pandemic, it's not our fault. So get the help that you need. You need to rally together as small business owners.
Okay. This is from Bruce. If a business started as golf, then added restaurant and wedding receptions after years, do partial wages related to restaurant qualify for PPP 2 at 3.5 times?
Yeah, if it's based on what the current activity is now, yeah, absolutely. I think that they're looking at what is the business during this time period. So what was the business in 2020? What was the business on February 15th, 2020, and you can have businesses that have multiple activities, and so if it is still multiple activities, then to your point, the portion that is related to, what is it, the restaurant?
Mm-hmm. Yeah, they were golf, but then they added the wedding and the
Okay.
restaurant.
So if you happen to still have golf and have the wedding, then just break it out in terms of don't include wages related to the golf that's related to the wedding. But what I think I hear you saying is that it is no longer golf, it is the wedding. Now the little trick you might have to deal with that you can solve pretty easy is that if no one updated your NAICS number on your tax return, which don't go beat up your tax advisor, CPA, EA, tax professional on it, because that's not really anything we truly pay attention to. And I don't mean that lightly. I mean, we go through when we have a new company and we're like, okay, is it this, is it this, is it this? And we spend time up front, but it could be easily overlooked that if you changed what you're doing, that maybe the NAICS code didn't get updated. But maybe if you prepare up the tax return for 2020 so it has the right code in the event that it is still under the golf, then I think you'd be okay, especially if you can get it filed. I don't see that as pulling a fast one. I see that as filing for what it is. So go with what it was on February 15th, and you should feel rock solid on that.
Okay, this is from Chris. There are 450 employees in a medical complex. The office is closed except for emergencies on March 13th based on local governmental rules. They were essential businesses, so they followed CDC guidelines and saw patients via telemedicine. All employees were paid whether they came into the office or if they worked at home. Most employees were set up to work from home. The employer did not receive PPP until April 14th. Will this employer qualify for the credit if the employees were all working from home for the period of March 13th to April 13th? I assume that they would have to file an amended return for the 941, but the payroll company is saying 2020 is closed and they can only do ERTC for 2021, and he is a CPA.
Well, great question on that. So that payroll company needs to get fired immediately, right now. I'm sure you would agree. That's terrible. It's despicable. I can't believe a payroll company would say that. It's lazy. Give me the payroll tech and the manager that said that. I will let them know. Happy to announce what company it is, because that is the worst thing I've ever heard in my life. They don't get to choose that a year is closed, period. The IRS does. It's not their payroll. I can't believe a payroll company said that. They should be ashamed of themselves. You should call a press conference practically on that. So Jiminy Christmas, all right, rant over on that. So my understanding is if it's over 100 employees, and check me on this on that IRS website, but it does indicate that they can't be working. So if I remember the language correctly, it indicates that they qualify for the ERTC if the employee is unable to work or telework. So this would be, they don't get to do anything and they pay the employee. So I don't think they qualify. So unfortunately the payroll company might be technically off the hook. But let me tell you this right now, right? It's January 8th. Yeah, it's January 8th. And you have a payroll company that says it's already closed. Gosh, I would love it if you, I won't even tell anybody that it was you that told me, but I would enjoy talking about that payroll company and embarrassing them, because that is despicable that they would say that. That is despicable. That is like punching a little kid. I mean, that's just disgusting. So anyways, sorry about that. Hopefully I didn't offend you by saying that, but at the same time, I cannot even believe that. That's just malpractice and disgusting, and they should be ashamed of themselves.
I agree. This is from Christian. Hey JJ and Amanda, first thanks for for the very informative Zoom seminar. ERTC with my S-Corp service business was 6 employees. I furloughed for a month in March, then rehire both in the same quarter. Can I get the ERTC on the rehire paid wages, or does the suspended business directed to employers that had to pay employees even though they shut down?
I think I understand the question, and it would only be compensation paid during the shutdown. And so if you furloughed them and then brought them back and paid them, but any payroll for days that were not during the shutdown, would it be retroactive? Now, if I misunderstood your question, and what you meant by furloughed is that you sent them home and you did pay them, then you would qualify for that. But what the hardcore rule is on the employee retention credit, in my interpretation, is, you know, during the shutdown, on that particular day, during a shutdown, what did get paid to your employee? And we all know that we don't cash out our employees every night. We know that we would look back on a specific date and go, yeah, they worked that date, or they would have worked that date, and that's what they got paid. So I hear your circumstances, and they're tough and they're not unusual, but if I understand the question correctly, the answer is if the payroll, in terms of what period of time you paid that employee for, is not during the shutdown, then unfortunately it wouldn't count. Hopefully I answered your question.
This is from Tarina, who's also a CPA.
Oh, wow.
ERTC question. Shutdown starts March 26th. PPP loan proceeds received April 30th. Are wages from March 26th until April 29th qualified wages for ERTC without making the election out?
Absolutely. So what seems to be clear, and I'm sure that this little hiccup will get smoothed over by the SBA. We all know the SBA's done a really good job of trying to get rid of little pebbles, you know, in our shoes, so to speak, on these issues. But the short answer is, yeah, the covered period is during, or the covered period is the time when the wages are all initially and automatically deemed for forgiveness purposes. So absolutely up until that date, you shouldn't have any issues related to election, and I'm sure you will. We probably just would want to, once the IRS comes out with new guidelines, double check we crossed our T's, dot our I's on that. But I wouldn't wait on IRS guidelines related to that. I mean, all we know is that it's retroactive. They qualify. Those don't require an election. I'd fire off your 7200 or record it on the 941. I'm just saying we'd probably want to just, dot an I and cross a T, look back on it just to be sure there wasn't maybe something else we were supposed to do, but can't imagine there would be. Thanks for coming.
This is from Elir. Thanks for the great and informative seminar. S Corp started second quarter of 19. When using the PPP2 loan calculator, do we enter only the numbers for the quarter that were below the 25% threshold in 2020, or do we use quarter 2, quarter 3, and quarter 4 numbers for 19 and quarter 2 and quarter 3 and quarter 4 for 2020? We only had quarter 3 of 2020 below 25%. The other quarters were higher than that of 19.
So if what I hear you saying is that quarter 3 of 2020 was down at least 25% compared to third quarter 2019, you're there. Now if I misunderstood what you asked, I had a specific slide in the PPP where I indicated directly from the law that if you were not open this quarters, here's what you did. If you weren't open these, here's what you did if you weren't open. But I think that you fall into, well, you have quarter 3 open, the other quarter 3 in 2020 can be used as a guide against that. So if you were down 25%, quarter 3 compared to quarter 2, and you were open the full quarter, I said that incorrectly. Let me just start over. If you were open all of quarter 3, 2019, and you're telling me that in quarter 3 of 2020, you're down at least 25%, quarter 3 2020 as compared to quarter 3 2019, then you should qualify. But I do want you to double check in the event that I'm maybe missing the full question. I don't think I am, but I want you to go find that slide. It's in the PPP2. It's really everything on that slide is just about these quarters that you're talking about. So double check it on that.
Soon Mayo. Once I fill out the PPP2 application, where do I send it through? Is SBA going to link with Interlink, or do I send it to a bank?
Yeah, so the PPP2 will only be through a bank. So if you didn't get PPP1, then get a bank that's dealing with it, obviously. If you haven't dealt with a bank on PPP1, I highly recommend a local bank, a smaller bank, a credit union. They're typically easier to get in with and work with, but it will be directly with a bank. You won't deal with the SBA directly at all when it comes to PPP.
This is from Kurt. Does everyone have to follow the form 7200, or can you just we answered that on the thing.
Yeah.
Arjan, on which basis should I apply for an extension of PPP1 because of my 19 payroll did not change? Should I apply for an extension of a loan only if there is a calculation error?
Yeah, so to reapply for PPP1, it would be that if the calculation was done correctly, and I mean correctly as in, well, they came up with new rules, they came up with something that allowed you to include more, so that would be the definition of correctly, then you would qualify for being able to reapply. So know this, they just came out with, you have a link to the SBA PPP web page. So if you go to the link I gave you that says everything PPP at the SBA, something like that, you're now going to see it says application for first draw. Open that up, take a gander at it. It's gonna probably lay it out pretty easily for you. I don't know that this was your question, but you don't get to go back and get more PPP other than you have already applied and have a PPP, you haven't received forgiveness, and to your point, there was some kind of error or something missed that you didn't get all that you could have, should have under the rules at the time and or the rules as they stand now. Thank you.
This is from Roslyn. Single LLC Schedule C or single LLC disregarded entity, what's the difference?
So disregarded entity doesn't file any kind of separate tax return. So typically when you have a disregarded entity, you're not going to file, or not typically, you would not be filing an 1120S or a 1065 or a Schedule C. Obviously can't with the partnership because you need more than two. So typically if you're filing a Schedule C, you would indicate that you are a Schedule C single member LLC. It's just a terminology, even though a single member LLC can be an S Corp and a C Corp, but traditional language, you hear more often single member LLC. So it goes to my point that that doesn't really necessarily mean anything. Disregarded entity is that it doesn't file a separate return, so it wouldn't even file a Schedule C. What's a disregarded entity typically? So for my clients, if they own a lot of real estate, we'll set up a partnership, LLC, tax as a partnership. And then as that partnership buys more real estate, we will set up new LLCs. The lawyer sets it up, but we'll set up new LLCs to own that new real estate. But it'll be a disregarded entity, which means it's wholly owned by the partnership. And the reason for that is that it separates out the liability, it separates the assets out. But being a disregarded entity, there is no separate tax return to be filed. In essence, the disregarded entity indicates that it's being done in essence only for legal purposes. So disregarded is smart for breaking up your assets. It's not any real kind of advantage, and the tax returns for the partnerships are starting to ask a few more questions about disregarded entities, as the IRS, I think, is learning that there's a lot of disregarded entities out there and they're not quite sure what they're really doing in the shadows, so to speak. So, good question.
You doing okay, or we need to stop?
Well, we don't need to stop, but
Okay. All right, this
are
is.
we making progress?
Mm-hmm.
We haven't gotten new ones?
No.
Okay.
This
Did
is.
we answer the ones that there was a few people that gave a few dollars? Did we answer those? Oh, do you want to? I don't know if they're still on, but you want to? How about I'm going to answer this one, and then at some point in the next 5 minutes, let's answer their questions.
Yeah, I have them. I mean, yeah. Carvalho. Since I opened in June of 2019, I got a PPP loan based on January-February 2020 payroll cost. Can I use the same info to apply for PPP 2? If I use the full 2020 payroll cost, I would be negatively affected.
So just read the first part of that one again.
Since I opened in June 2019, I got a PPP loan based on January-February 2020 payroll cost.
Yeah, so for PPP 2, you don't have any look back on how you did anything on PPP 1. Basically, it's going to be what were your payroll costs in 19, what were your payroll costs in 20. Now, go to the page that I break out for you if you weren't in business for all of 19, because you do find a different average. But point is, I don't see how you don't get out of including a full year of 2020 in terms of the higher of. I don't know that I've seen anything that would allow you to use a partial amount of 2020 at this point in determining your payroll cost. Might talk to your bank about it, because that's definitely unusual circumstances. But maybe really the takeaway is you can't look to what you had done on PPP 1. It won't have any bearings. We got to look at what are the rules for PPP 2, and the rules doing those analysis or what's laid out in the law. It's meant to help you. So take a look at that, and then just you let the chips fall where they may. But there's a slide, and I believe it's in PPP 2, or yeah, it's in PPP 2 section. It's directly from the law, and it addresses exactly what it is that you're talking about. And then run it by the bank, because ultimately they're the ones that are going to need to sign off on it on the backside. And I'm sure the banks would be happy to help you hopefully solve that.
Okay, this is from Cheryl. She paid to get a question asked.
Oh, well, thank you.
Can you qualify if you are a business with 1099 employees?
Unfortunately, you cannot, and I do want you to not use that language anymore of 1099 employees. It's going to start getting you in trouble, and I don't mean like going to jail, but I want you to know, and anybody out there, that the IRS has introduced a new form 1099 NEC, non-employee compensation, and it's a $5,000 penalty for sending it to somebody that should have been paid as an employee. So, long story short, there's no such thing as a 1099 employee in a legal designation. And the only reason I'm actually telling you this is I'm saying it, I'm looking out for you. So do whatever you're going to do in 20, but you might really think differently about how you approach 21, because you don't want to get hit with a $5,000 penalty. The IRS is able to assess a civil penalty, and it's for the protection of the employee is why they've done it. And if you have been following some of the lawsuit that was between the IRS and Uber, which came out of California having a lower standard or an easier way for someone to qualify as an employee, ultimately Uber did prevail in that in terms of showing that the Uber drivers were independent. Now, you very well may be going, listen, JJ, I got you. These are independent contractors. Sorry, I said 1099 employees. Take it as this. I'm looking out for you. And I've had this discussion with a few clients saying, we don't want to use that terminology, number one. And number two, as we move forward, for everybody that's listening, you need to reevaluate who you're sending 1099s to, because if it's to somebody that routinely does work for you and no one else, in terms of, you're really the boss, if you will, then the IRS is really wanting that to be somebody that's paid as an employee. So anyways, just watch your step on the 1099 aspect, but it does not qualify, unfortunately, for anything related to PPP. But what your business could qualify for is the EIDL, www.sba.gov, make sure it's gov. And I don't know that you need it, but it is a loan. You will have to pay it back, of course. And if I was you, I'd wait just a minute, because if the EIDL grant system is getting funded again, we're going to know that here probably within a week or so, how it's going to work. But you should qualify for the EIDL, Economic Injuries Disaster Loan. Thank you.
If Adam Christopher, Maria, Rose CC, Blake, Bruce,
Wow.
if any of you guys are still on, and the chat has refreshed and I can't scroll up any further, so I cannot see the questions that you asked, so I apologize about that if you were still on. I will go to Bob. I do have your email. I appreciate it. Bob paid some more money, but he was also in the seminar, but I have your email. We just haven't answered all the emails yet.
Well, let's go to Bob.
Also,
Thank you,
Hasmo,
Bob, by the way. Thank you.
Hasmo, I've lost your question. Captain Phillips, Joseph, and Jaco, I've lost all of your questions, so I am so sorry about that. Let me, oh, no, I got Jaco's. Here it is. S Corp with
And then we're gonna hit Bob.
S Corp with W-2 wages and take owner draws. Is it better to do that or better to increase the W-2 wage amount and not take the owner draw?
So in general, you want to increase your W-2s and your amount to a reasonable amount. What's reasonable? Obviously, that's the big question. Typically, what's reasonable is that, you know, if you're pulling out $100,000 between wages and distributions, now if you're paying wages of about $60,000, maybe 70, and distributions of about 30 to 40%, it depends on how big your business is and if you're the only employee. But long story short, you definitely want to pull more wages out than you are pulling out distributions. Now, I do have clients though that they're paying themselves, you know, $250,000 of wages, and they're pulling out $800,000 in distributions. And the reason that that's okay is that they have a team, or they are paying themselves plenty of money, $250,000. They're paying the full Social Security and the Medicare. But with those clients, what I require of them is that their distributions are literally quarterly. So we're able to, in the event of an inquiry, tell the IRS, you know, truthfully, this isn't compensation. This isn't paid regularly. This is a quarterly distribution with a formula to pull out these funds. And it's not smoke and mirrors. We're talking about somebody paying themselves $250,000, well over $100,000 more than the Social Security limit. If you look at any of the court cases, any of the inquiries related to reasonable compensation, it is for those that are paying $0 or maybe $12,000. So at the end of the day, being reasonable is the key there. And from the perspective of the S Corp, what you do want to do is preserve the advantage of the S Corp, because in the circumstance, if you're pulling out $100,000 and you're going 70,000 with wages and 30,000 in distribution, well, those distributions, of course, you're not paying double tax on. You don't get to deduct it. You probably know that, right? So that 30,000 that you pulled out as a distribution, not subject to payroll tax, the net income from an S Corp is not subject to self-employment tax. Well, you save $4,500. And so anyways, you're still saving. You want to preserve that. And that sounds like exactly what you're trying to do. So great question on that.
All right, this is for Bob.
All right, Bob. Hey, thanks, Bob, for coming, and thanks for the extra contribution. Let's make sure that we hit his question hard, thorough. You want me to read it? You want to take a break? Okay.
Trying to leave only one you both have been excellent. Thank you, thank you, thank you.
Thank you.
Trying to leave only one question in somewhat shorter version now per the directions given later. My C Corp was very lumpy transaction, building 16 homes a year. We did PPP 1. Historically, we do not do quarterly financial reports. Third quarter was bad and fourth quarter made it up mostly. And by upcoming 3/31/21 corporate year-end fiscal, we are likely to pretty flat by then on our year accrual basis. Looking at the 19 and 20 bank statements, deposits in second quarter and third quarter are clearly much lower, down 28% to 56%. Can we use that simple backup for PPP2 qualification and forgiveness, even though our normal 11/20 corporate return is accrual?
So, yeah, let's see. Well, the first thing I'm going to pick apart is that on the PPP2, It is based on the calendar quarter, so you're on the right track there, meaning it sounds like you have a fiscal year end, so it is based on the traditional calendar quarter. I hear what you're saying on the accrual. So you don't want to, I don't want anybody to hear me in quote unquote manipulating numbers here. But the thing with accrual, and this is why I don't like accrual, but you're in a company that sounds big enough that you're probably required, which I'm going to give you a suggestion on when I'm done answering the question. But on the accrual, you do recognize income when it is that you, in quote unquote, have earned it, or the percentage of completion, and probably familiar with that more than I am. So my point in saying that is that typically in a normal year, a normal set of circumstances, especially given what you had indicated to me, is that you're normally not doing quarterly financials. I think you'd want to look carefully at the accounting of what has been included in the gross on the accrual method, because QuickBooks, when you just enter in an invoice, well, that's when it's going to enter it in for accrual basis. So I don't think anybody will, but this is definitely not a hint, hint, wink, wink to go and cook your books, and I know you wouldn't do that anyways. All I'm saying is we want to be conscientious, which means in your favor, take a look at what the accrual is. And the reason I say that is that I interpreted from the SBA that you are doing this on the tax basis, and you are doing that then how you're reporting this on your tax return. And so I understand a little bit of predicament because your tax return is not a calendar year, and so you are having to break up and figure it out. The reason I think, though, I would approach it as finding a way to qualify, hear me carefully on that, is that you clearly qualify, okay? And the reason I say that is that the entire point of PPP, including the EIDL, is to help for real world accounting, which we all know real world accounting is cash basis. So one of the reasons I'm not a fan of accrual, and I talk about it in my book, is that the accrual can be really almost whatever the heck you want it to be, because if you just book the income and you're not careful about the dates that it's booked, then it could distort the numbers inadvertently, by accident. So when you tell me that your numbers are down as much as they are, then what I would really conclude is that your books are not matching up in when the income is being recognized. And really at the end of the day, if you were a client of mine, I'd be sitting with you and looking at it carefully and making sure we were doing everything. No smirks. I have what I call a smirk test with my clients. Meaning if we say, well, if I could do that, okay, if we're going to say it like that, then we ain't doing it. So I'm a pretty upstanding guy, so are you, Bob, so I don't think you're taking at all what I'm telling you is to go and shake it out in your favor, but what I'm saying is you qualify. I mean, if you're telling me that you're looking at your income on that, and then you're in an industry that it is, difficult sometimes to even recognize when did you earn the income and things to that effect. So I wouldn't lose a lot of sleep on it. What I would do is come up with a way that you feel good about it. Hopefully you have an accountant that you can look at it. And if you have an accountant that throws their hands up and says, well, I'm not going to be any part of this, well, I can understand that, but it might be time to find somebody new. Because if I had a client in your circumstances, as I had indicated earlier, I feel my role is let's find a way for it to work, because if we can't, then we know it really can't work. So at the end of the day, look at your numbers carefully, because it doesn't match up in my mind. You should qualify for accrual if your numbers are down that low, and I'm sure that we could find ways to show that you don't qualify if we were accounting, doing some hardcore accounting analysis to say, well, no, but guess what? You're not Microsoft, okay? You don't have audited financials, I don't think. But here's my recommendation for you, Bob, and then if Bob Did he send an initial email?
Mm-hmm.
He did? Or is that his only email?
No, he sent one that had a bunch of questions, and then we told him we were only answering
Okay.
one, so then
Okay.
he
So-
resent it.
Okay. So, Bob, my suggestion is that under the new law that came into play on 1/1/18, you may have been doing accrual because your bank required it or because of the bonding company, but we can't let those companies decide how we do our taxes. Not the saying that that was the case, but 1/1/18, if your gross receipts are 25 million or less, last 3 years average. In 19 and 20, and moving forward, if your gross average is 26 million or less, okay, meaning the last 3 years average it out, you don't have to be accrual. Accrual sucks most of the time. It is not typically, it's not a method of accounting that people do by choice. They do it because they have to. So if you are in a set of circumstances that it was done the way that it is because that was the law at the time, know that it went from 10 million gross receipts or more required accrual, now it's 26 million. Now, there is a recognition process if you switch from accrual to cash, and you do it over a period of time. There's a little bit of work for it. You file a Form 3115. But here's why I'm telling you this. Is my solution for you would be when you go to file this tax return that includes these quarters, the way you solve this is that you switch to cash basis accounting. You should. I just don't know why you are accrual. Now maybe you're doing more than 26 million, but I would go back and also not only look at your gross receipts and how the accrual is accounted for, but I would take a look at why you're accrual. And now your tax professional may say, this is like the worst time, Bob, for you to ask me these kind of questions, and they probably wouldn't be wrong, but at the same time, you want to know sooner rather than later. And typically, what you would look at is, if you're on the accrual method and you're going to switch to the cash method, really what comes into play is, okay, well, was there income that you recognized in the prior year because you were accrual that you now collected in the next year? What's the differences? So you don't have to wrap your head around that. Point is really as CPAs, EAs, and tax professionals, we can do it quick and dirty and go, okay, well, here's what the issue's going to be. You're going to pay it over this amount of time. There's some work to it, but we can do that later. As your professional, we can do that later. And if you then file the tax return on cash basis, then in Monopoly, you got your get out of jail free card, no pun meant there, and collect your $200 and pass go, because you will have done it on the basis of your tax return. And guess what? I'm not recommending that you go to cash basis to get PPP. I'm recommending that you go to cash basis because 9 out of 10 times, cash basis is going to work better for a customer. Now, I will tell you this, that for those that are on accrual and they're under that rule and it went up to 26 million, well, guess what? In your industry, percentage of completion, if you typically finish your projects within 2 years, you don't have to be accrual, because that was another factor that required it. You don't have to follow Section 263A, which is not necessarily related to you, but it's related to inventory and having to allocate management costs to inventory. Here's the deal. 26 million or less, or under 26 million, you don't have to do all these funky, archaic ways of accounting. So this might be a real way that you just, shed 300 pounds going from accrual to cash basis, because that's what I usually tell clients. If you're on accrual, you're running around with a full belly all the time and your pants can't stay up. You run on cash basis, you're running more like a professional athlete. Now, if you're over 26 million, then you're out of luck on that. Let me see Bob's other email real quick, and then do you want to say a few things while I take a drink and thumbs up and, let me see Bob's email. See, Bob's on, and Bob paid that extra.
We have another one that did too.
Oh, okay. So we'll go to
Thank
that.
you guys for coming on tonight. We're trying to get through all these as quickly as possible, so we do appreciate your patience. JJ is doing an amazing job. He still does have to prepare for tomorrow's 2 seminars, so big kudos to him for still being on here. So if you would please give a thumbs up. All that's going to do is push this video up to where more people will see it, so then he can get more subscribers and we can all just live happily ever after. I'm kidding, but we just want to get as many people watching JJ's videos as we can, so he can help more people just as he has helped every small business owner that is watching this. So we appreciate you guys very much. We have missed going live with you guys. This has been fun. We truly appreciate you. And a big shout out, I don't know if you're still on here, Miss Glinda, but it's so good to see you. I hope that you and Leah are doing very well. And I have not forgot about your question, Blake. I have it up there. I've taken pictures of things, so we will get people's questions answered as quickly as we possibly can. So just be patient with us. We are doing the best that we can.
All right, Bob, so I think I covered everything. You did have a question about those sick leave credits. So if you send them home, all the reasons that you provided, they qualify. If the person you were worried about was your employee of having COVID, with COVID, whatever, then you're going to qualify for that $511 a day for 10 days. When you say what days does it qualify, well, it's the days that you had them at home and you paid them. Okay, so the reason there's that leeway of 10 days is that the whole premise of that is for you to play it safe just the way that you did. Now, I'm just so everybody knows, the way I read this email is we have some very real circumstances that there wasn't necessarily the same kind of proof where somebody would say, see my test in every one of those. But the law is that if somebody has symptoms of, could have symptoms of, because they're around certain individuals, you have to remember the whole thing about COVID is not waiting till you have symptoms, it's if you've been exposed to. So just know this, Bob, every circumstance I read there would qualify. Now, if you have an employee and they've gone home to care for a loved one, if you will, then that would qualify for the lower amount, which is up to $200 a day. So yeah, get those credits. You qualify for them, and again, what days does it count for? The days they didn't work and you paid them, up to 10 days.
Okay, our next one is from Justin Cobb, who attended, and he also paid earlier to ask more questions, so he just threw another $70 at you to...
Oh my gosh, well thank you,
And Justin really wants to get a phone consultation with you. I told him that you are booked right now, but we would be opening more dates up to get you two connected on the phone.
Well, so Justin, email me, okay, and put Justin $70 during the live, and I have one opening in January. I just turned it off before we went live, so I'll give him that opening. I had one opening and I was just so exhausted. I was like, you know what? I'm just gonna not do it. So send me the email and I'll give you that opening.
All right, Justin's question. For the ERTC, Q2 below 50%, Q3 above 80%, ERTC available for Q3?
Well, can I see that?
Yeah, it's in this pink.
Let's see. Oh, gotcha, Justin. Okay. Okay, so here's the deal. The short answer is that yes, but we do want to, and this is since we're going to do a phone conference together, and I believe it's on the 28th is where I shut it down at noon. So send me an email and I'll send you an open slot. Because the last one I had was at the end of the month, so it was on the 28th of January at noon. I got seminars and I'm teaching to Tennessee and Texas and a bunch of other stuff, so it's literally the only time that I've got. So anyways, Justin, so we want to verify, because we know we're getting ready to get a big update by the IRS. And this is one of the things they're going to update. But if you're below the 50%, then you get the credit through the quarter that you start to get above the 80%, just the way that you described here. So I would say yes, it would be quarter 2 and quarter 3. Let's look and see what it is, because we definitely might be looking at a pretty large credit there for you. Remember in 2020 that it is, it's 50%, it's a 10,000. So here's the reason I'm telling you that, is that if you've mostly used up your credit, meaning if most of your employees have hit a near 10,000 mark, near the end of quarter 2, and you don't have as much wages in quarter 3, I think that kind of lowers the threshold of concern. Don't get me wrong. The reason you're asking is we just want to do it right. My point though is that I don't think and see you putting something together where you're right below a threshold and then coming out of it and trying to take advantage of anything. So the way the law reads is that if you have at least a 50% decrease in a quarter, that quarter counts in the next quarter, and when you stop counting the quarters is the quarter after the quarter that you get above 80%. So I do want to double check that. So if you don't mind, email me in the regarding line, put the 128, January 28th, noon, and put your question in there for me if you would, because whenever we talk, we'll double check it. And I understand that's the 28th, Justin, so I'll tell you what, send me that, and when you see on my YouTube channel that I'm starting to talk about new IRS regulations, then email back. If you don't hear from me within about 24 hours, email again. Thank you, sir. I appreciate it. I'm tiring out, but I said I would go till midnight. So let's keep pushing on. Do you have any? Yeah.
Bob just sent you another 25. Said I just wanted to buy you guys a bottle of wine. Thank you for being so passionate to help people. It really shows.
Well, thanks, Bob. Thank you, Bob. I appreciate that. Good luck to you on all that.
All right, real quick, we'll knock out some of these that have paid that are on here waiting. Maria, my question was 150,000 forgiveness. Is it a combination of PPP 1 and PPP 2?
Nope, it'll be per each, which is good news for us. So it's 150,000 or less on PPP 1, you have the simplified, and 150,000 or less on PPP 2, and you have the simplified, which is great. I don't think I saw the new forgiveness forms on there. I know the new application forms are on there, but nonetheless, that'll be the case for sure. The forgiveness will be separate, and it's 150 per. So thank you.
Captain Phillips.
Captain Phillips, what's up, my friend?
Do sole proprietors add any PUA unemployment to their total income, considering PPP 2 guidance refers to total income and not necessarily gross receipts?
Yes, and Captain, I think you and I visited about that in one of the comments a while back, I think, because you were thinking that you needed to include it because you're being an honest guy. So you're still going to be an honest guy, but here's the answer that we want to go with, which is a good answer. So the reason the unemployment's not included is that that's not income, from the business. Seems logical that it would need to be included because you're trying to just make sure you do things fair and right. But at the end of the day, when you're looking at your gross receipts, It's strictly from the business, and it is something that unemployment's not related to the business, it's related to the individual. So if someone gets unemployment because their business isn't doing well, but it's not ever reported or a part of Schedule C for the self-employed. So I feel extremely confident that I feel 1,000% confident that the unemployment won't be included in gross receipts of the business. It is taxable income, but not in for the business. So hopefully that helps, my friend. Thank you, by the way.
This is Adam Christopher. I am a gig worker with a 536 credit score. What are my chances for getting a PPP loan and EIDL?
Awesome. So for PPP, it has nothing to do with your credit score. It even says that specifically. It's all going to be based on your net income. So if you have any net income on Schedule C, you're going to qualify and you're going to get it. Doesn't matter about the credit score. Everybody has those circumstances, especially now. The EIDL, now some think that maybe they didn't get the money because of credit score, because maybe that was the logical conclusion. But most of the time with the EIDL, if someone doesn't get it, it's probably because of other circumstances. So there are clients that have gotten the EIDL with 300, like I know them personally. Credit scores, 300, low, terrible, right? So 500 is not bad, my friend. So my point saying that is, yes, if you need the relief, get it. On the PPP2, get your Schedule C for 2019, line 31, divided by 12 times 2.5. If you know your figure for 2020, but remember it's based on the net for the gig worker on Schedule C. And then on the EIDL, it's based on your gross. So go to SBA.gov, do it tonight, and you will indicate what were your last 12 months of sales before the pandemic. So know what that is, or quite frankly, you can just put down 2019. Really what they want to know is that you're a viable business in the sense that at once upon a time, before the pandemic, you were a business. So if you have a Schedule C, you're golden. All to say, typically with the gig worker, you're a lot of times considered more just service. So when you get to the question on the EIDL and you're only applying for that on the SBA.gov, it may ask what your COGS are, cost of goods sold. So unless you're selling furniture or you're buying and selling product, your COGS are zero. There's some confusion over that. SBA clarified it. The reason this is important is on your EIDL, typically what it will be is your gross, what is it? It's a gross, half your gross. I apologize, I'm tired. Just know this, it's based on your gross. And so you're not gonna probably have any expenses. I wanna say that it's half your gross, no more than 150,000, typically. So get in there if you need the relief. And then if I actually said if I actually told you to apply right now for the EIDL, wait a minute, because if they replenish the EIDL grant, that would be the time to apply, because you would then be able to take advantage of that. But if you need the money, I wouldn't wait on the grant, because honestly, you're only going to get $1,000 of the grant unless they replenish it to the full. So wouldn't wait long. If we don't know much about the grant in about 10 business days, then get in there and apply for the EIDL. So best of luck to you on that.
This is from Roxanne. Can I pay self with owner's draw using EIDL money from my LLC? Taxes are reported on a Schedule E on my tax return.
Oh, okay. Yeah, that's an unusual set of circumstances, but Schedule E can qualify for the EIDL. So what's interesting on that is that I've never come across a circumstance, asked about the circumstance, read about the circumstance, and in part is that I've not come across a circumstance where somebody's gotten the EIDL based on Schedule E. Now I know that you can, so you did it correctly. I don't want you to worry in any way, shape, or form that you somehow got it incorrectly. I just haven't come across anybody that has got it. So you can get it on the Schedule E. Let me just tell you this, that in the normal set of circumstances, what you're able to pull from an EIDL would be your, in essence, compensation. Well, there is no compensation to you on a Schedule E. You may call something compensation, you may feel like it's compensation, you may pay yourself regularly, whatever the case is. So with the Schedule C, the EIDL can be paid out to the self-employed by taking line 31 divided by 12 times 2.5, same figure for PPP. But I don't know a mechanism that would allow you to pull money out related to your EIDL for Schedule E, and the reason is that there really is not a mechanism currently. And what I'm trying to say is that the EIDL just follows, well, how does this individual pull money? Now, with that being said, here's what you could do if you want to, sometimes in the absence of guidance, we then follow guidance that would be similar. So here's what I'm getting ready to tell you. You can't rely on what I'm getting ready to tell you because I'm making it up in the sense that I'm giving you an example of how you might approach this, but I'm also telling you how I would do it with the client, okay? So if we look at Schedule F and we look at Schedule C, yes, that is net income that is subject to self-employment tax, but for the EIDL, that's not really a factor. But for the EIDL, it does say that the net income of Schedule C, the net income of Schedule F, divided by 12 times 2.5 is the amount that the owner would be able to pull out for themselves from the EIDL. So I think if you did that same thing, now there's no add backs for depreciation or anything like that. So I think if whatever on your Schedule E qualified for the EIDL, right, whatever those properties are that were included in the income that got you the EIDL, then whatever your net income is for tax purposes, or what you would project it to be, I think that if you took that net divided by 12 times 2.5, I feel like you would at least be in line with how it's working on everyone else. I don't believe that you're going to be in a set of circumstances where someone knocks on your door over it. So clearly you want to do it right. So my point in saying that is document what you did. Document to show that you have Schedule E, here's the net income, divided by 12 times 2.5, that's the dollar amount that you took. So that if there is a knock, if there is a question, which I think would be rare, but you have a reason, you have a reasonable reason for what you did. And the thing is that in the absence of guidance, when we're creating our own guidance, if it's consistent with other guidance, then we typically should feel comfortable that we did it appropriately. So hopefully that'll help.
Okay, Blake, I read new businesses formed in 2020 that do not have a quarter in 2019 to compare revenue. IRS would allow to use the first quarter in business. Could you discuss new business eligibility for ERTC and PPP?
Okay, so for the ERTC, if you're closed down and you have wages, that would be what you're going to qualify for, is that you were closed down. For the ERTC, there is no requirement that you've been open in the prior year. In comparison, if we were to look at how it works with the PPP, which mirrors in some ways the ERTC, but we're going to need to look at this new major revisions, and when I say major revisions, the new law and the ERTC, we're going to need to wait for the IRS to come out with that additional information. But that's a long way of saying that in the new stimulus, what it indicates is that if you do not have any quarters in 2019 to base off of, then in essence you're taking your 2020, and you're taking those quarters and you're comparing themselves. Was this person in our seminar?
No, they
Okay.
paid.
Talks amongst yourselves.
Talks amongst
Talk amongst
ourselves.
yourselves.
Yes, JJ is getting tired. We all are, and but we're getting there. We're getting there slowly but surely. We may come up with something creative to get back with the emails for the people who paid in the seminar, so that way I can get him to rest before tomorrow. So I'm over here brainstorming what he's going to allow me to make him do. What he's going to do willingly.
All right, so I'm trying to find this schedule for this question. And let's see, seminars. And where are we at here? Okay. I'll have it here in a second. So what I'll
Yes.
do is we'll take a screenshot of this and
Roxanne, yes, there is still room on these seminars. I don't believe that they...
yeah, just go to jjthecpa.com/seminars and you'll see which ones we've got. Thank you for asking. And it'll take you to the link where you sign up. So I appreciate that. Let's see.
And I am looking, but let's see. Yes, there are still spots available for tomorrow. Make sure that whenever you go to Calendly, a lot of people have not been clicking the date. You have to click the date on Calendly, and then it will put the time up, and then you have to confirm. There's not just a sign up page on the front, like there's steps you have to go through. So make sure you click the date, the time, and then go through the steps.
Yeah, it's super easy, but yeah, you're right. Okay, so did he email?
No, he paid on YouTube.
Okay, so send us an email. I'm just tired. Who is it?
It's Blake.
Okay, Blake. Send us an email, Blake, and put in the regarding line, Blake. We got like 500 emails, so put Blake in the regarding line. We're going to look for it. And what Amanda's going to do is send you this picture of how it works. And what this indicates is that for a business that's not in business for 2019, this is out of my seminar, like boom, right out of my seminar. You compare first, second, and third quarters That's right out of the law. There is at least a 25% drop. Okay, don't send them the picture because it's confusing and it's simple actually. Here's what it is. You compare your full quarter, so whatever your last full quarter is, to the other quarter. So you're just comparing. If you got all of 2020 quarters, you're just comparing them to each other. So you would, in essence, you would compare second, third, and fourth to first quarter. So was this person, was Blake in business in first quarter 2020? You'd have to be for PPP. ERTC, it wouldn't matter.
He just said I read new business formed in 2020 that don't have a quarter in 2019.
Okay, so if you weren't in business in first quarter 2020, you won't qualify for PPP. SBA clarified that like 58 hours ago. And then for ERTC, what you would compare is if your first quarter in business is second quarter, then you would use that as your baseline. And then there's going to be some guidance coming out on that. So kind of a wonky answer because there's not really a straightforward aspect, because what I was just getting ready to send you, I realized is related to PPP2. Long story short, if you're not in business in first quarter, you're not in business on February 15th, no two ways about it. You won't apply, you won't qualify for PPP. If you were, you gotta have wages, and if you were in business in the first quarter of 15, then you would compare your second, third, and fourth to first quarter of 2020. On the ERTC, it doesn't require you to be in business on February 15th. You would then compare basically your first quarter to your second, third, and fourth quarter. If you weren't in business on the first quarter, then you would compare second quarter to third and fourth. You gotta have the wages. And then I definitely though would not just haul off and do a Form 7200 on this, because you're kind of on some unusual ground and you probably want to make sure, as you are now, that you've got it nailed down. So look for the new guidance coming out from the IRS, which should be probably next week. And they're going to have a section that talks about that. So you might have to look a little bit, but they'll have a section that talks about comparing if you're not in business during 19 and in 20, and how does that work. So thank you for the question. And then, so go ahead.
I think that we just answer the couple more that are remaining that paid, that are on the live right now. And then I think that tomorrow we can do a video, or you can just do voice memos and reply to these people in the emails, and that way you can get some rest.
Okay. I like the plan. Here's what we're going to do. Let's answer the questions for those that paid. I'm going to have to just be quicker, but know this: if anybody does pay, then come to the next live, because I got to call a timeout on taking any more questions. And I love it that you've paid. We're going to answer the ones that have paid, but if you pay from here forward, then I'll owe you the answer on the next live, because the intention here was to make sure we were doing the answers for everybody on the seminar. I'm not as concerned, because the benefit for those that attended the seminar today for us to do it on the live is that they didn't have to watch the live, and we could just email them to say, go here for when we answered it. So let's tackle those. Know this: I'm going to have to get a little quicker in my responses.
This is from Bruce. Self-employed, received $1,000 EIDL. It was used to reduce my PPP loan. When I get forgiveness, do I get the $1,000 back? The bank I got PPP 1 is not participating in PPP 2. Will this cause a pain in getting PPP 2?
So yes, you should get that 1,000 in essence released. Because the EIDL the grant did reduce PPP forgiveness. It doesn't now. We don't have a mechanism to know how that will work out, but it will. So follow up with the bank. The bank that's not doing PPP 1, either get to a local bank or a credit union, and I'd do it quickly. Most banks, if they're participating in PPP 2, they're putting it on their website. I think you'll have an easier time going one or two extremes, it seems. So I don't have any companies to recommend to you, but it's either the bank that's local, credit union that has 2-3 locations that seem to make things work quicker, or it's these kind of online only banks. I'm not going to mention any, because some people have great experience and some people don't. You're probably not going to find much luck going with kind of a large regional bank, just because they've already got their customers.
Joseph, if a restaurant is ordered by the county to reduce seating by 50%, but gross income is only down 15% due to increased takeout, do they still qualify for ERTC in 2021?
Well, they should, because the things are mutually exclusive of each other. So if you are under a pandemic shutdown, partial shutdown, that's not necessarily then saying, well, you can't succeed financially or do better. So look to the qualification of that without the concern of doing well. And kudos to you. I know you're still down, but good job.
Sherrill, do I qualify as a Schedule C owner, but I have contacted employees? contracted employees?
So the contracted employees won't count. You as a Schedule C will. It'll be based on your net income. You won't be able to include anything that you paid to contract individuals as it relates to PPP. PPP is based on, though, your net income after you would pay those independent contractors.
Antonio, can I use my draft 2020 1099 miscellaneous of my contractors and my Schedule K1 for my initial PPP loan draw application?
No, they're not gonna allow that anymore on the 1099. It's gotta be whatever you're gonna report on Schedule C. That was the case when it opened up April 3rd of last year, but by April 14th, they indicated that, nope, it's gotta be on a Schedule C. So take whatever your 1099 is. If you're gonna have expenses, then you need to subtract it. Now, if you don't have any expenses, okay, but have a Schedule C because it's gonna be based on the net, won't be based on the 1099 that you received. It'll be based on Schedule C. So it may sound a little bit like an extra step, it might be, but it will be based on the net Schedule C. So if you got 10 grand and you don't have any expenses, put the 10 grand on Schedule C, it'll net 10, there you go. And then, what was the second part of it seemed like there was a second part to that.
Can I use my draft 2020 1099 miscellaneous of my contractors and my Schedule K1 for my initial PPP loan draw
Okay.
application?
Yeah, so you don't get to use your K1. If you're an S Corp, it definitely doesn't count either at the individual or the S Corp level. For a partnership, the K1, in terms of how it comes into play, is only at the partnership level and only if your Schedule K1 has self-employment earnings, which is in box 14A, would you be in circumstances to qualify. So in neither one of those, the K1 doesn't yield you getting anything at the individual level. If you're a partnership, it gets it at the partner level based on box 14A of Schedule K1. Perfect.
You did it. Good job, JJ, at the CPA.
We have more emails.
Yes, I thought we were gonna take care of them.
No.
Joshua,
All right, let's see. How many do we got?
29.
Jeez. I don't say sheesh in a complaining way. I just say sheesh because I've been talking too long. Okay.
You have to start from the bottom up.
Oh, okay.
Those are the ones. And you can't do that because I have to email them back. That's why I'm saying that we can you can send voice memos to these people tomorrow or something. I've tried, you guys. Rob, I appreciate the email you sent me. You guys get it. He's a little stubborn. He likes things to be just a certain way. But we do appreciate you guys sticking out with us. I don't have it up here, so I'm not sure exactly how many of us are on right now. Let's see. 180 of you.
What? Wow. Yeah, so much ERTC. It's interesting that's just definitely a hot topic.
Yes.
All right, well.
All your fans are saying it's time for you to go to bed.
I know it, but then we told these people we were gonna do it and I've just been blabbing. So let's go, let's do lightning round. Let's go. Lightning round. I'm staying awake because I'm standing up. Let's go.
Okay, this is from Mark,
Yeah, he's got a number of them, so read them one at a time.
but we only answer one question. We told him that.
All right, well, let me see it.
Joshua,
I understand.
we told him you only get to ask one question.
Mark, if an owner owns less than 50% or less of a corporation, I thought they could get ERC. That is correct. The 50% includes family attribution rules according to what I read in the IRS FAQ. So yeah, I believe that it is 50% or more. So if you have someone that's less than 50, then you're good to go on everything that you indicated. And if in the IRS FAQs they did not list the spouse as a related person that cannot be paid, can a wife be paid? Well, I read somewhere that the wife can't be, but that's only if you have an owner that's 50% or more, and this is on the ERC. So I saw something specifically IRS wouldn't know where that talked about it. But if you're talking about that they're under 50%, then they're all out of it, including the spouse. So then the question is, if you have a client that they did not use up all of PPP, they've got it left over, didn't send it back, can they still take the 2021 ERC? Seems like it doesn't matter. Well, what the PPP indicated was that if you do have money left over, you tell the bank and it gets reduced, it reduces your PPP2 amount. So that's how that gets handled. I don't see that PPP1 at all bleeds over into 2021 because the PPP1 ended 12/31/20. Now, if somebody's reapplying, well, that falls into 2021. So I don't see an issue affecting ERC in 2021. But if they've not used it up, the SBA is clear in the guidelines that they need to have used it or will use it. But the problem is that what their expectation is, in my opinion, is that you would apply for PPP2 and then show the overage not used. I don't know how they can use it because you're supposed to use it by 12/31/20. So you probably have to look at that more carefully. At the end of the day, it would need to reduce down PPP2 because they're definitely not going to get it forgiven. If they don't do it, or that sounds wonky, at the end of the day, they're going to have to pay that back because they didn't use it by 12/31. But the real answer is I don't believe it'll change what you do for 21. Okay.
You have people paying you to go to bed, sending you money, so you'll go to bed. So, this is from Nick.
All right, we'll do 5 more.
I am a dentist. I was closed from 3/13 to 6/1. Do I calculate that pay? Do I calculate the pay that would have been paid or any other pay that was paid for the ERTC?
So absent of anything related to PPP, you only get to include in ERTC what was actually paid.
I'm just laughing at all the money that's coming in.
All right, is it really? I need to just go to bed?
Like, say 1, 2, 3, 4, 5 people have paid you and like,
Okay.
boom, just like that.
All right, well, so I think I answered that question.
You did.
The last one, and I don't know, we probably should just email the rest of these wonderful individuals just to tell them that I went as long as I could, and we will get their questions answered, and we'll let them know how sometime tomorrow.
Yeah, I doubt they're sitting at their phones waiting for an email.
Well, but tomorrow morning.
Yeah,
we'll tell them
I'll
that, yeah.
email them tomorrow. Okay, this is from Steve. I am still confused about changing the covered period from 2 months to 24 weeks. I calculated the PPP loan on cost divided by 12 by 2.5. 24 weeks would have been a much larger amount. Can I apply for additional PPP 1.0 for the difference, or do I have to use the lower amount when applying for forgiveness?
So anything that you just described, if I understood it correctly, is you look at it separately. When you go and get PPP1, you get the loan, it is only 2019 divided by 12 times 2.5. You now have 24 weeks to use it up, period. So 24 weeks has nothing to do with how much you get, it's how long you have to spend it. I think that I answered that. All right, well, I am gonna do it because I can barely stand up. Thank you. I mean, holy smokes, I hate to get off with as many people that are on. I didn't read Rob's email, but I'm sure it was convincing. Rob is he is the one client that we took on, he and his family, in 2020. I take on one client a year, and there's somebody that we're considering that emailed on the first of the year to see if they could be the one for 21. Anyways, Rob, I hear you. I appreciate you. All right, hey, listen, I'm probably being a little delirious, and that's probably what caused me to just talk so long with all the questions. So we will get to the rest of them. Probably what it'll involve is going live, and we'll just have to hunker down on that. So thank you for tuning in. I guess we've been live now
Yes.
almost 3 hours. And then I did seminars today, and I've got a couple tomorrow, so I'm looking forward to that. Definitely get some sleep. I've got everything ready for tomorrow. I just got to polish it off because I need to update it for what came out this evening. All right, well, hey, I'm going to get some other videos out this weekend talking about the PPP2 and the new application that came out. And thank you, everybody. Thank you for your support. I don't know that there's probably anybody that gets paid to go to bed.
Well,
Right?
I agree.
I feel very fortunate. Listen, all of you that are on, thank you for everything. Thank you for a wonderful 2020. You just make this real and fun, and I'm so appreciative. And I apologize, I'm not as accessible or as available as I was in the beginning. But I do look forward to going live, and it'll be fun to do some lives where we're not so intent on having as many questions, and maybe have a couple of lives where we're just maybe having a happy hour. Maybe I'm going to be on a floating duck, something like that. That'll be a while for that. All right, Amanda, what else?
That's
Anything?
it.
We're good?
We appreciate you all, and I hope you have a good night, and I'm going to go get this man to bed.
Well, thank you so much, everybody. Much love. Happy New Year, as I said in the beginning. Thank you so much for the extra dollars. It means so much. It's very special. I just want you to know that sincerely. It makes me feel very special because it's definitely not expected, and it just blows me away. So thanks for everybody coming on, especially those that are always on. For our new subscribers, thanks for being a part of this. Stick around. It's going to get better because it's already great. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. Talk to y'all soon.